Bloomberg News. Check them out at the Macro Squawk Desk. Squawk, just do SQUA GO on your Launchpad.
Let's go to Washington, D.C. now for World and National News with Nancy Lyons. Hey, Nance.
Thanks, Tim. Well, we'll be receiving another update this afternoon on President Biden's condition after he tested positive for COVID-19 yesterday. Bloomberg Washington correspondent Anne-Marie Hordern with the latest.
We heard from his doctor, Kevin O'Connor. What we've learned is that the president's symptoms have improved. He did have a fever last night. He was treated with Tylenol, and that does seem to have cleared that up.
Bloomberg's Anne-Marie Hordern says the president's symptoms include a runny nose and a dry cough. He's also received the antiviral drug Paxlovid, which his doctor says has helped. Congress will be taking up another military and economic aid bill for Ukraine after the August recess. We get details from Bloomberg's Amy Morris in Washington.
There is overwhelming support for another aid package. Lawmakers already signed off on two, totaling more than $53 billion. Democratic Senator Chris Coons says the next bill will provide military and economic aid while addressing global food shortages. Republican Senator Lindsey Graham says he wants another bill by the end of the year to include economic and military aid, including more air defense capability, so he says Ukraine can get back to school and restart its economy. In Washington, I'm Amy Morris, Bloomberg Radio.
Shipments of Ukrainian wheat and other grains will soon resume through Black Sea ports. That could help avert a global food crisis. Officials with Russia and Ukraine signaled parallel agreements with Turkey and the United Nations, but not with each other. Ukraine's grain shipments have been largely stalled as its ports have been blocked since the Russian invasion. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Nancy Lyons in our 99.1 newsroom in Washington, D.C. So, all right, we're in a kind of a Good Friday mood, and here's the way to take the wind out of your sails in just about 2 seconds.
Yeah, this one on Bloomberg Opinion by Stuart Trow, writing that assuming you'll retire healthy is a costly mistake. After a working life of hard graft, it's only natural, Carol, to look forward to health, wealth, and happiness in retirement.
Unfortunately, the latest research suggests that the vast majority of us will not reach that milestone with all three of those criteria in place. According to the Institute for Public Policy Research, it's a think tank, only 16% of women born today will reach retirement age in good health. And listen, dudes, it's a bummer for you. Just 9% of men will do the same. That's a 1 in 10, basically.
90% chance that, you won't reach retirement in health, wealth, and happiness. Come on.
That is like...
Okay, well, let's talk about some more numbers here, okay? Healthy life expectancy can be very different to ordinary life expectancy, although clearly there is a strong correlation here. Added to which healthy life expectancy has risen more slowly, the average British woman can expect to live the whole of her last decade in poor health.
Oh my God, your odds are better if you are wealthy and your job involves less physical wear and tear. Nevertheless, the overwhelming majority of people will be coping with a number of serious health conditions by the time they reach retirement age. And this obviously has welfare issues, but the financial pressures can also be just as stressful.
Okay, so some takeaways here. Don't bank on being able to shore up your savings later in your career. Start saving for retirement early, of course. And there are a number of practical steps that you can take right now to prepare for such an unpleasant eventuality.
The other thing is you should also ensure that there are arrangements for your own care of any of your dependents are put in place before they are needed. I mean, I saw this with my mother-in-law. She took care of so much. Her financial things, she got herself into a physical place. She simplified her whole world way before she got a lot older, and because she just wanted to have everything in place.
What's interesting is this is from a UK perspective, and a lot of these same challenges we face here in the United States.
Really sorry, everybody. We promise the rest of the show will be more upbeat, kind of. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Snapchat shares are plunging now by 38%. Stocks lower across the board. In fact, lows of the day right now. Disappointing results from social media firms and weak economic data are adding to recession fears. Treasuries are rallying as traders dial back bets on Fed rate hikes. 10-year yield right now, 2.78%. The 2-year is at 2.99%. S&P down 55, down 1.4%. We've got the Dow down 273, down 0.9%. NASDAQ down 276, a drop right now of 2.3%. Red on the screen, down day. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Kickoff to the close. Bloomberg's comprehensive cross-platform coverage, bringing you insight on what to watch ahead of the U.S. market close, starts right now.
And welcome to the Kickoff to the Close. Carol Massar along with Tim Stenovic, welcoming all of our viewers and listeners here at Bloomberg. Also welcoming our Bloomberg TV colleagues, Carolyn Hyde, Kriti Gupta, and Shanali Basak to walk our Bloomberg audiences, TV, radio, and YouTube. Really, the key things that we need to know as we wrap up this Friday trade and this week of trading. And Carolyn, we've got some specific company stories, and then we're also thinking about that Fed meeting next week.
About the Fed meeting and about some of the economic data that looks weaker into that Fed meeting. Some of the PMI data rolling over here in the US, over in Europe as well. No wonder sentiment soured somewhat. Let's just take on guests and audience through the numbers. We're seeing currently S&P 500 down by 1.4%. After the moon music had been so optimistic, we're now well below that 3,950 level at 3,944. Dow Jones is off by 0.8%. NASDAQ, though, big tech, which has been your winner of the week, is now your laggard of the day, down by 2.25%. And Russell 2000, small caps not liking it, we're off by 2.2%, Kriti.
Yeah, let's definitely take you through the key things to watch as we kick off towards the close, Caroline. Inflation is 100% in focus. Take a listen to what the former Richmond Fed President Jeffrey Lacker said on his view on the Fed's path forward.
No matter what, whether they go, 50s or 75s, they're still going to be in a situation where the effect on inflation is out into next year. They're going to have to make a judgment about when to stop without knowing whether they've done enough or not. So they might as well get it done. They might as well get there fast.
All right, that, of course, is Jeffrey Lacker, former Richmond Fed president. Get it done fast. I'm going to tell you about something a little bit later on that's among the most read on the Bloomberg about maybe actually Jay Powell slowing down, but we'll get to that in just a moment, Tim.
All right, well, also something that's slowing down is ad spending by companies. We're seeing that play out in social media stocks today, thanks to the disastrous quarter that we saw from Snap report yesterday. The company not only reporting a miss in revenue, but not even mentioning what they're going to do in the third quarter for the year, pulling guidance essentially. Snap down more than 38% as we speak. Meta Platforms down more than 7%. The company formerly known as Google, Alphabet shares down 6% right now. So we're seeing reverberations throughout the industry. The big question, what happens next week? Because Tuesday we hear from Alphabet. So do we see a different picture when we hear from the company for earnings? Meta Platforms, we get Wednesday, and then Pinterest, which is down too, we hear from on August 1st, Kriti.
Yeah, well, Tim, you know me. I love to put a little macro twist on everything. I love the social media story because, Caroline, at the end of the day, it really is all about how you're bracing for a recession. Is it a worry about consumers not willing to spend, or is it a little bit of perhaps building up your armor and bracing yourself for the extra costs that advertising would require?
Well, from the micro to the macro, I tell you one guy who's not seeing signs of a recession, and it's the CEO of Amex. I got to speak with Steve Squeri a little bit earlier, and after his numbers, he's saying, look at them. Look at the numbers. The people can speculate all they want, he said. They are spending. The spending is there. He saw no sign. He says, look, they're still beefing up in terms of their hiring. The only thing that he said he's looking for, that he'd watch for, that would worry him, is unemployment. If those figures do rise, if that does drive higher. But for him at the moment, he says, look, with 11 million unfilled jobs, of course he's still out there trying to hire people.
Yeah, all is sunny at American Express, a good quarter. You know, I mentioned this to Vince Signorella a little earlier in our conversation today, Caroline, and he actually pushed back on me and said that the idea of high spending at companies like American Express, he sees as actually a contrarian indicator that people are putting more money on cards. So not necessarily a good thing about the economy, but, only time will tell.
Yeah, consumer credit up, personal spending maybe, seeing it kind of come down and under pressure. So you wonder what that ultimately means. And you do wonder, Vince was very bearish. And I'm going to say that one of the most read stories on the Bloomberg has to do with a survey that we did here at Bloomberg of economists. And it really gets to this point that could we all be starting to, at least economists, thinking about the Fed getting less aggressive? We've got a chart up for our TV team and viewers and also for radio. And just this whole idea in terms of 1% expectations in terms of rate moves, that has come down and is certainly, it's not as aggressive at this point, Creedy, but economists are saying, yeah, maybe we get another 75, but then we're going to think about Jay Powell and company moving down to 50 maybe for the last two meetings of the year and maybe being a lot less aggressive.
Yeah, well, I mean, at the core of it, it is becoming a recession story. How much should we worry about recession when the traditional recessionary dashboard, things like layoffs, for example, well, they're not seeing those major warning signs. And this is going to be a key theme that we've seen this week, especially with those tech earnings, or I should say tech stories, that we will see more with tech earnings next week, Shonali, in terms of, is the layoff story the next leg in this recession narrative?
It's a great question. I want to look at one indicator here, and that's in Silicon Valley Bank. The parent company is really tumbling here in the stock market on an intraday basis, the worst drop you've seen since the depths of 2020 and the depths of the pandemic. And now you're also seeing it on a closing basis. It would be the worst drop since 2009. So remember, several brokerage firms have cut their price targets. This is the bank that really lends to a lot of high-flying tech companies. And so you're seeing a significant slowdown there in terms of second quarter EPS missing analyst expectations, net interest income missing analyst expectations. So if you're thinking about the health of tech, this is one firm that's deeply exposed to it.
And I think that's sort of the beginning of the narrative and where we want to end it, because with Snap down so much today, Tim, as you were highlighting, with the worry then that Twitter was also underwhelming, what then of next week? What then of the key earnings that we have, some of the big tech juggernauts? What of Meta? What of Apple?
Yeah, what's priced in right now? I mean, is a slowdown in the advertising market, is that priced into what we're seeing, Carol? Is that already, reflected in the company's stock price, or do we get surprised to the upside next week?
Does it all matter with the FOMC meeting next week? No, it does matter. It does matter. Anyway, we're going to be back in just about 30 minutes from now, live on TV, radio, and YouTube. And don't miss Beyond the Bell at the market close.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening and watching Bloomberg Business Week on Bloomberg Radio. We are on YouTube as well. It is going to be interesting, the juxtaposition, to get some really big tech earnings next week, and then what we get from the Fed.
Apple is one that I'm really looking forward to, of course, because we get an idea for consumer spending around the world. We kind of know what's happening with ad revenue right now.
Yeah, exactly. But it really plays into the consumer side of it already. I don't know about you, but my phone is my necessity, but I might not upgrade as quickly.
That's a good point.
All right, you are listening and watching Bloomberg Business Week. Carol Masser, Tim Stenovic. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So, safe to say that we were both kind of fighting over this one because I really wanted it to be a gainer in my gainers list today.
I'm sure the CEO wanted it to be a gainer too. We're talking about Mattel. Ynon Kreiz, the CEO of Mattel, is going to be joining us in just a minute. We love speaking to him every 3 months, basically, to find out what the most recent quarter had in store.
Stock's still up 5% this year, but definitely having a down day.
Let's get to Charlie Pellet, though, because we got 90 minutes to go, Charlie.
Much indeed. We've got the Dow, the S&P, NASDAQ all on the minus side. Mattel, you guys going to be talking more about that in a moment, down now by 6.5% after earnings. We've got the S&P on the minus side now by 57, down 1.4%. The Dow is down 270, a drop now of just about 0.9%. NASDAQ down 287, a decline of 2.4%. We are at just about the worst level of the day for the Dow, the S&P, and NASDAQ. Stocks are falling as disappointing results from social media firms and weak economic data adds to recession fears. Case in point, Snap Inc., parent of Snapchat, down now by 38.1%. Social media companies, by the way, saw nearly $90 billion wiped off their stock market values today after disappointing revenue from Snap and a lackluster report from Twitter raised concerns about the outlook for online spending. Twitter shares, by the way, are higher by 0.9%. Meta Platforms, parent of Facebook, down 7.8%, and Alphabet, parent of Google, down now by 6.4%. Well, next week will be a busy week for earnings with more than 30% of S&P 500 companies reporting. Emily Rowland is co-chief investment officer at JH Investments.
We do see this deceleration in economic growth starting to hurt corporate earnings. Look, the tightening that the Fed has put into the system still needs to be felt by corporations, and we still think that there's some room to go there. We do think, though, that leaning into higher quality companies, ones with great cash flow, good return on equity, lots of cash on their balance sheet, that is what you want to do in a late cycle period. And frankly, quality has gotten crushed this year.
And the S&P now down by 54 points, down 1.4%. The Dow down 246, down 0.8. NASDAQ right now down 2.3%. 10-year yield 2.79%. 2-year yield 2.99%. Spot gold up 0.1%, $17.21 the ounce. West Texas Intermediate crude down 1.7%, $94.71 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. We mentioned shares of Mattel are trading lower today, down more than 6% after the company said second quarter margins shrank due to inflation, higher supply chain costs, and royalty expenses. CEO Ynon Kreiz was on with our Bloomberg TV crew earlier, and they talked about how the company, though, did keep their forecast intact.
Ynon Kreiz is chairman and CEO of Mattel. He joins us on the phone from California right now. Ynon, great to have you back with us. How are you?
Hi, Tim. Hi, Carol.
Hi.
Great to be here.
Well, bring us into the most recent quarter and what you're expecting for the rest of 2022, because when we've been able to talk to you over the last few months, you've been really confident that you can manage the supply chain challenges and the inflationary environment that we find ourselves in right now.
That's right. So first of all, on the quarter that we just completed, these were excellent results for Mattel with our 8th consecutive quarter of top-line growth. Our profits also grew significantly with adjusted operating income up 82%, despite high inflation. And following a record first half, we expect to continue growing in the second half and are planning for increase in consumer demand in the holiday season. So all in all, we're very happy with the position we are in. We expect to win market share going forward, and we reiterated full-year guidance for strong top-line growth, increased profitability, a higher gross margin, and all of this is in spite of significant inflation and negative currency impact.
So are you like, come on, investors, you so got it wrong?
Look, we are very focused on managing the company. We have been growing now consistently. We're executing on our strategy. We won market share for 2 years in a row, and we expect to win market share this year as well. Our supply chain is in very good shape. All of our owned and operated factories are fully operational. Product is flowing in. We're expecting a second half retail sales to be above the first half levels. We're seeing the industry growing as well.
Well, so Ynon, what happened? Because one of the things that Tim and I have always, after we talk with you, we're kind of blown away by your ability to be flexible with supply chains, move them ahead of kind of some of the constraints that we've seen in the last couple of years, and manage it really, really well. So what happened in the last quarter? Because I think it's safe to say that what is freaking out investors, and it's been a top theme for all of us here at Bloomberg, is what's happening with margins. What happened that your margins shrunk that maybe even caught you guys by surprise?
No, the margin impact was expected. It was factored into our guidance. We talked about it at the beginning of the year. And if anything, it's getting better, actually, because we did revise our guidance on gross margin, not by much, but nevertheless, a positive uplift. We're able to offset negative currency impact and maintain and reiterate our guidance for the full year. So the margin reduction was very much expected and as I said, factored into our guidance in the beginning of the year. Over time, we do expect that the combination of pricing and cost savings will more than exceed the impact of inflation and contribute to margin expansion. And we do expect inflation to moderate in 2023. But, we also reiterated our goals for 2023, where we talk about high single-digit growth in constant currency, adjusted operating income margin of 16 to 17%, and continue to grow our earnings per share and exceed $1.90. So we're staying the course, continue to execute our strategy, and seeing it in the numbers.
Give me an idea of what you're seeing with pricing power right now. Where are you able to raise prices so that consumers will continue to pay, but you can better cover increasing costs on your side without destructing demand?
Yes, pricing is one of the options we consider in times of inflation. Sorry, this is not obviously unique to Mattel or unique to the toy industry. But we've said before, and we're being very consistent about it, is that when we raise prices, we always keep consumers in mind. We're being very thoughtful and strategic and are committed to maintaining the highest quality and best value for consumers. We haven't seen any negative impact from the pricing actions we took last year. We just took another action that will be factored into our numbers in the second half. And this is something that we previously announced, so this is not new news. And we haven't seen a negative impact. These actions are very methodical and thought through.
So what's selling? I know in our Bloomberg story that you guys, I think, said on the conference call last night that you guys were seeing some softness in sales of higher priced items, such as a Barbie dream house, I think, which costs around $200, having owned one when I was younger. But anyway, so what is selling? What is not? Where are you seeing maybe some consumer sensitivity because of the overall inflationary environment?
Well, in the second quarter, we saw comprehensive growth, 24% in constant currency. We were up in double digits, strong double digits in North America, EMEA, and Latin America. We grew in all of our reported categories in our three power brands, Barbie, Hot Wheels, and Fisher-Price. So the performance was pretty comprehensive with some really strong numbers. We did say that Hot Wheels, as an example, is on track to achieve its fifth record year in a row. Barbie is just coming off an all-time high in 2021, and we said that we expect to be sales for Barbie to be comparable. So we're holding a very high bar.
Right.
And all in all, be a pretty pretty strong performance across the board.
So we were talking about the Barbie movie on the call, and I know we've talked with that for you before. I think for what I've understand is that it's wrapped in terms of principal photography. What we've been wondering, and I'm going to steal a question that actually Tim brought up on our call, but he said, you know, the point of, do you anticipate making more money from the movie and your partnership on the Barbie movie, or more from the lift that the Barbie brand gets thanks to the movie?
No, we absolutely see this opportunity as incremental to our toy business. Our strategy to capture the full value of our IP is about participating in highly accretive business verticals that are adjacent to the toy industry and are also driven by big franchises and big brands, but we want them and expect them to be accretive in and of themselves. So the partnership, or the Barbie movie and the partnership that we have with Warner Brothers is such that we have a meaningful economic participation in the Barbie movie, as well as, for that matter, all of our movie projects. We do have economic participation, and of course we understand that in success there will be a benefit for the toy business, but we do expect economic participation outside of the toy aisle as well.
What does meaningful economic participation mean? Does that mean that Mattel's a producer of the movie and you're putting money into the movie, or does it mean that you get a percentage of ticket sales?
Yeah, it's different types of participations, but we do not fund the movie. We do not participate in movie financing. This is not our expertise and not our business, but we do participate economically, both as the IP owner, as the owner of the brand, and as a producer. We are producer on all of our projects.
Do you get a piece of the box office, Ynon?
We haven't been specific on the commercial terms, but box office and receipts are part of the equation of typical participants.
Hey, can we talk to you about SpaceX? We've been talking about this story all week long. Tell us about the collaboration. It's a multi-year agreement that Mattel has announced with SpaceX to produce toys and collectibles.
Yeah, this is an exciting partnership to create space exploration toys and collectibles under the Matchbox brand. The toys will come out next year. The collectible toys will be available on Mattel Creation, our direct-to-consumer site. And this is really about, scaling our portfolio. It's about innovation. It's about thinking out of the box and bringing new partners to the toy aisle. And this was one that people were...
Okay, guys, as you can see, I need to cancel this order. It took quite a while and it moved lower. So there's not much point to hold Bitcoin order to sell at 23, as you can see, 285, something like that. So please cancel this order, and we will see what's going to happen in a couple of hours. It's Friday, so probably we'll not be able to sell Bitcoin today, but we will see what's going to happen. Speak to you later.
The product side, but we always look to continue to innovate and delight our consumers and do it in fun and creative ways.
I would imagine there is demand for that, so I guess we'll have to wait and see, Ynon.
I would buy an Elon doll. I just think that would be kind of fun. Ynon, thank you so much. Once again, just giving us a nice chunk of time and really leaning into the business and letting us know what's going on. Ynon Kreiz, he is the chairman and chief executive officer of Mattel. Mattel shares under pressure, but as we mentioned, they are still up for the year here in 2022.
Well, let's go to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. The House January 6th committee is planning more hearings in September, although no dates have been firmed up yet. During last night's hearing, committee chair Benny Thompson says there are still plenty of questions left to be answered.
We continue to receive new information every day. We are pursuing many additional witnesses for testimony.
Thompson, who is recovering from COVID, spoke via a video link. Lawmakers still want to see missing text messages from the Secret Service, and they also want testimony from former Trump advisor Steve Bannon. Well, the jury has reportedly reached a verdict in Bannon's contempt of Congress trial after nearly 3 hours of deliberations. The announcement has not been made yet. Prosecutors in their close said this is a simple case of a man who did not show up after being subpoenaed by lawmakers. Bannon's attorneys during their arguments questioned the signature on the subpoena and whether it was legitimate. Bannon faces 2 counts of criminal contempt. Well, progressives are calling on Senate Majority Leader Chuck Schumer to recuse himself from antitrust legislation involving big tech because his daughters work in the industry. We get more from Bloomberg's Nathan Hager.
A coalition of 16 groups has written a letter to Schumer, which Bloomberg News has seen. It asks whether he's trying to run the clock on bills he's promised to bring to the floor by early summer. Schumer's daughter, Jessica, is a registered lobbyist for Amazon. Allison Schumer works for Meta Platforms. Protesters have also placed billboards outside Schumer's homes in Washington and New York. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Thanks so much for that update, Nancy Lyons. Let's get on over to Charlie Pellet for a check of what we're seeing with markets right now. Because, Charlie, we've got just over an hour to go.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We are lower across the board, Tim, with the Dow, the S&P, NASDAQ, all on the minus side right now, with the S&P down 55, drop right now of 1.4%. All about Snapchat today, disappointing results from social media firms. Snap Inc., that is the parent of Snapchat, plunging 38.8%. Other social media companies down as well. Meta Platforms lower now by 7.9%, parent of Facebook, and Alphabet, parent of Google, YouTube, among others, down now by 6%. Meta and Alphabet both report earnings next week. So the S&P is down 55, down 1.4%. The Dow down 260, lower by 0.8%. NASDAQ down 273, a drop there of 2.3%. 10-year yield 2.79%. Spot gold up 0.2%, 17.22 the ounce, while West Texas Intermediate crude oil is down 1.6%, 94.78 a barrel. Recapping, S&P down 54, down 1.4%, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. The new issue of Bloomberg Business Week magazine out on newsstands, online, and of course on the Bloomberg terminal. And in it is a story about the AI platform behind a Jeff Bezos-backed startup's vegan burgers. So I feel like, Tim, that there are so many big macro themes of the day in this story.
You said Big Mac, which kind of makes sense.
Did I say Big Mac?
Big macro.
Did I?
I heard, so I hear Big Mac in there because I'm always thinking about food.
He's always hungry.
Augusta Saraiva is supply chain reporter for Bloomberg News. She's with us right now in the Bloomberg Interactive Brokers studio. Augusta, good to have you with us. What is this AI platform with Not Company SA?
Thank you for having me on, and it's interesting that you said Big Mac because they actually have a big deal with Burger King. But this company is actually a Chilean startup.
Wait, is it Big Mac McDonald's or Burger King?
Big Mac is McDonald's, Whopper is Burger King, but
they're
sort of the.
I'm getting picky.
But they're kind of the counterparts of the restaurant. You got to know your burgers, Carol.
All right. There's too many.
But
choices.
that's the point. These are not burgers. They're not burgers. Literally, they're made out of potato chips. They're made out of sunflower oil. Everything that you would not expect to see on a burger is there.
Okay, the problem though is sunflower oil, a little hard to come by these days.
Yes, and when you're making alternatives to burgers, that's extremely needed because it goes on a third of all of the alternative burgers out there. And because of the war in Ukraine and because all of the supply chain shortages we've been hearing about over the past year, it's been hard to find. So what this company did, since they were already creating alternatives to everything, they just decided to make alternatives to the alternatives, right? So that's how they came up with the idea.
And how does it work? Is it good? And does it taste right? Or what,
Well, that's the point. They just started trying it out, and if it works out, that's the plan. They want to sort of revolutionize the industry. But right now, what they're doing is that they're using the algorithm, which they call Giuseppe. It's sort of a nickname, and they're trying to use that to create.
I'm thinking somebody was in a lab. There was a little, tequila going around. And they're like, "What are we going to call this thing? Giuseppe."
Yeah.
Or is there a reason behind it?
There is a
Okay.
reason behind. It's based on an Italian painter that would only paint using vegetables. So that's why.
I
There's
love
a
that.
reason. Yeah.
Okay, so I'm also imagining in my head like a little robot that kind of goes in and tastes things and thinks to itself, okay, this is what could be a meaningful alternative. But we're just talking about algorithms instead of computer, right?
Yeah, in a way, it's just a computer, but it sort of scans the product and then it breaks everything down. Either if it's a recipe or if it's an ingredient.
What do you mean by scans the product?
So it looks at, let's say, a lettuce leaf, and it's like, so what's here? What are the molecules? What is everything that is here? So that they look at that, and then they're like, how can I recreate that using different things? Maybe lettuce wasn't the best example because we don't actually need vegan alternatives to that. But maybe if you look at a burger, how do you take the animal out of the equation? So that's what the algorithm does.
I keep thinking of like this incredible whiteboard or something, right? Like, and here's what the traditional thing is, and what are some things that we can use to substitute that maybe give it the same kick nutritionally, or because the bigger story here, and this is why I get to the Big Mac story, the big macro story, is we are looking at a world that is getting maxed out. And we don't feed the people that are currently on this earth. So how do we do it in the face of things like climate change that are really shifting where we traditionally farm and so on? So it's like, how do we do this? And this is maybe part of the solution.
Yeah, and that's exactly how NACO was born. They were born not only to create alternatives, so it's not like oat milk that actually doesn't taste anything like milk, right? Their goal is to make alternatives that are good for the climate, that are good for people who do not eat meat, who try to avoid that, but they also want their products to taste like the real ones. So their milk, if you go and try them, it's made out of pineapple juice, but still it tastes like actual milk.
It's pretty amazing that
Yeah.
they're able to do that. Augusta, I'm wondering about competitors in this space. We talk a lot about Beyond Meat. It's a publicly traded company. The stock has been under a ton of pressure. We just had Dina Shanker on our program yesterday talking about the challenges that they're having with pepperoni. And then, of course, Impossible Foods, which is still privately held. They sort of have their, secret recipes to try to replicate what the taste of a burger or animal protein is. Is this like a secret, not a secret recipe, but is this like a secret sauce for this company, this algorithm to try to replicate?
It is, indeed. And that's the point. It's a private company, so at this point, we don't really know where they're going with that. They
Right.
actually had plans to go public next year, but with all the headwinds, that might not be the case. But as of now, yes, that's their secret ingredient, right?
Mentioned some headlines crossing the Bloomberg terminal, and this has to do with Steve Bannon being found guilty by a Washington jury of defying a subpoena from the Congressional Committee investigating the January 6th attack on the U.S. Capitol. The verdict was reached after 3 hours of deliberation by the jury today. The trial reached a quick close after only 2 witnesses testified for the government, and Bannon's attorneys decided against putting on a defense. This, of course, goes to, again, the January 6th committee that's investigating. Steve Bannon, of course, has been a key insider when it comes to the Trump administration. So it'll be interesting to see now what happens from here.
Again, Steve Bannon found guilty of contempt for defying a January 6th subpoena. He was tried in contempt of Congress charges in Washington, Carol.
So now is he forced then to testify? We'll see. We'll look for some more on this. All right, let's get back to, we're talking about a story in Bloomberg Businessweek magazine. Augusta Saraiva is with us, and this is all about this AI platform that's really, I think, it's kind of the next step when we keep thinking about. It's so funny. We were talking about Beyond Meat this week, and like when it first came on the scene, it was like, okay, this is the answer, right, to feeding the world. But this actually takes a much bigger picture, right, and looks at all the elements and things, and like, how do we kind of figure out alternatives?
Right.
Is that fair?
Yes, it is fair. And that's what they're saying. They don't want to only revolutionize the one product. They want to revolutionize the industry. So maybe one day we're going to see that algorithm, that Giuseppe, becoming the norm in the industry, but not right now.
Yeah, exactly. It's got some big money behind it, right? We talked about Jeff Bezos is behind it, Danny Meyer, and a few others.
Okay, so we talked a little bit about taste. I'm wondering about being able to do this on a mass scale. Carol alluded to the challenges with feeding the world in a previous comment to you, Augusta. And I'm wondering how we do this in a way that solves the problems that we're seeing right now. Not just hunger, but of course climate change and the emissions that are associated with raising animals.
Yes, and that's one of the reasons why we decided to take the supply chain angle for this story, right? Because with everything that is going on nowadays, the disruptions, the war in Ukraine, it's so hard to find alternatives. And at the same time, you have so much hunger going on. And when you think even the alternatives, right? Even oat milk, the production of that, it takes so much water to produce. So even when you think about the alternatives.
Almond milk too?
Yes.
Because almonds use so much water
Now I feel
to
guilty
produce.
because I love my Oatly.
Yes, I do too. So that's the point, right? Can we ever get this right? And I think that's what this company is trying to do, create an alternative that is good, that is fair, and that doesn't take a lot out of us.
Well, and if you could start to compare like A from B from C from D in terms of different ways of either producing things and food, the impact on the climate, you can kind of figure out which is the most sustainable way and also, meeting the goals of feeding the world, if you will. Augusta Saraiva, she is supply chain reporter here at Bloomberg News. I love that we have a supply chain reporter. So relevant.
And she's just awesome. She got to be on our team at Quick Take for a few months as a rotator. And we miss you, Augusta. Yeah, thanks so much for joining us.
All right. You are listening to Bloomberg Business Week, watching us on YouTube. Carol Massar along with Tim Stenivek. We've got about 60 minutes left. We're going to head over to our TV team, talk about the market, some of the key things that need to be on your radar as we get to wrap up the Friday trade as well as the week overall. We are seeing stocks just off their lows. This is Bloomberg.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. 60 minutes left in the trading session. Caroline Hyde, Shonali Basak, Kriti Gupta In for Taylor Riggs, we are joined now by our colleagues, Carol Massa, Tim Stenovic. So together, welcome across TV, radio, YouTube, a moment to dissect what is still a market selling off, and actually volume's not that light for a summer Friday.
Yeah, interesting, right? There are people out there trading and pushing certainly the equity markets overall. They are down. If you want to look for a bright spot in the markets, take a look at these hospital stocks. They are just on a tear. They are rallying in a big way. HCA, Tenet Healthcare, Community Health Systems, Universal Health. I mean, take a look at HCA, up about 12%. Communities up almost 18%. This is after both HCA and Tenet Healthcare posted results that defied expectations for weaker demand amid high labor costs. They are just outperforming, Tim, in a big way on this Friday.
Yeah, what's not a bright spot, though, social media companies. Check out the Global X Social Media Equity ETF. It's down about 5.6% right now. Snap down 38%. Pinterest down 14%. We got other companies in there, too. Meta, Alphabet, the parent company of Google, down as well. Of course, coming after Snap reported revenue for the second quarter that came in below estimates and also declined to give guidance, Caroline, for the current quarter, just weighing on the entire industry.
You're so right, and that really has been a key downward trajectory for the Nasdaq, therefore. We're off by more than 2% on that particular benchmark, 261 points lower on the day. 11,798 is where we trade. But everything is in the red right now. We see the Russell 2000 off by more than 2 percentage points. We see, of course, the S&P 500 off by more than a percentage point, 1.3% lower, 51 points to the downside. Still up on the week, but down on the day. And we're also down to the tune of 0.75% on the Dow Jones Industrial Average, Sonali.
And inside of the S&P 500, you're seeing some steeper declines in certain sectors. Communication services dropping 4.5%. Infotech 1.6% lower on the day. Those are your two worst performing sectors. You have utilities, consumer staples, real estate just marginally higher on the day. None of them are making it 1% higher, guys.
And really, to your micro sort of story of the technology trade, Tim, to the macro, what is the economic data and the contraction we see? The PMI's data, for the first time in a couple of years, actually pointing negative, a contraction territory for the composite that we see. Still elevation in the services, but really the manufacturing weighing us lower. We are now sub 50 when it comes to this month's overall US composite PMI data, and we saw the same in Europe. This is hints, little nuggets, pieces that we take as evidence of a slowing economy and worries about that recession.
Yeah, so Caroline, it makes us wonder, will these central banks, maybe will they slow down possibly in terms of their moves? Well, Jeffrey Lacker, who was the former head of the Federal Reserve Bank of Richmond, he says, you know what, the Fed has to continue to be aggressive, do whatever they have, even if that means we hit a recession. Check it out.
The alternative, to let your foot up off the brake before inflation has come down, let it settle at 4 and 5%, that's just a recipe for another recession down the road. That's a recession for prolonged pain, making the agony longer and longer, stretching out over years. That's not good for the American public. I think they realize that. So they're going to have to, what they ought to do is stick with it until they get inflation down to under 3%.
All right, and of course, that's Jeffrey Lacker talking earlier on Bloomberg Surveillance, the former head of the Federal Reserve Bank of Richmond. But this is like the position between a rock and a hard place, right, Tim? I mean, the Fed, we know, has to be aggressive to get inflation down. But if they overdo it, what does that mean in terms of what kind of inflation recession we get?
Yeah, forgive the image. I mean, when he was speaking, I was just thinking of like something quick, like ripping the Band-Aid off to make it like quick and as painless as possible. But that's really what we're facing right now. And also, I think about how much is outside of the Fed's control, and that's energy prices. And if we continue to see energy prices high as a result of low supply and the Russia-Ukraine war, then how much will inflation actually come down?
Well, it's a lot of things that are out of control. I think to your point, I mean, look at the housing crisis. What can the Federal Reserve really do about that at a time when there is still a massive shortage at the time and affordability is still an issue? Higher interest rates can't even help something like that to the extent that the economy really needs it.
Yeah, and I think also you have to think about how off guard investors might get. We had that great conversation with research affiliates as Robert Arnott just a little bit earlier in the program, and this idea that there's this huge divergence here between what the terminal rate might look like. Is that a 3.5%? Is it a 6%? Like Jeffrey Lacker is saying, a lot of divergence in future expectations.
And divergence among CEOs as well. I mean, we were speaking with the Amex CEO earlier, and he's saying, look at the data, look at the numbers. I am not seeing any evidence of a slowdown here. And then you look at Snap and the ramifications we have there. We have some of the warnings coming out of the other tech executives about slowing hiring. We are seeing some bracing for some sort of concern amongst whether or not we're going to be out there, whether we want to be paying the prices we currently see.
You know, Caroline, we too just talked with the Mattel CEO and Chairman Ynon Kreiz, and he was very optimistic about the second half of the year. And even though the share price is getting beat up today, he was very confident in terms of growth numbers. numbers, hitting it, and still continuing to see successive growth going forward.
He wouldn't spill the beans, though, when we asked him whether or not there was actually going to be an Elon Musk action figure. As you know, there is this partnership with SpaceX. I got to tell you, I mean, it sounds like he understands there would be demand for that sort of thing, but he wouldn't give us that granular of guidance when it came to how they're thinking about innovation in the product category.
Well, let's stick with the concept of innovation in particular, because I think that's really where you perhaps see maybe the biggest threat to what's going to happen in the face of a recession. Think about the fastest growing companies right now in the S&P 500, Apple, Microsoft, Alphabet. Even on a valuations basis, they're the ones that are out front. I'm curious about, though, how much of the cost pressures that you're already seeing in the cutback of advertising and the slowing of hiring also means a slowing of research and innovation.
Yeah, that's a great question. What long-term challenges that creates? You know, there's a lot of recessionary talk going on right now, but what about a slow growth environment, even coming out of that? You all of a sudden have this worry that there's nowhere to invest even after this horizon. 1 year, 1.5 years, how long does it take, guys?
And that we're going to be some of the reads that we want to get. What is business spending like? What is it like across the pond as well? Because Europe was rolling over. We saw, of course, the PMI data in Europe looking pretty ugly as well. But Madame Lagarde coming out and saying, look, inflation, I'm afraid, is the first port of call for us. That is what we're going to tackle. I have to say, let's get on to the good news. At least there was that deal between Russia and Ukraine. At least we're going to see some more grains come out. At least food inflation might be tamped down that little bit.
Yeah, but Caroline, that's a key point right there. The contagion effect that you're going to see coming out of Europe, coming out of even emerging markets, and how much of that ends up becoming kind of the canary in the coal mine for the entire American economy.
And I think about the story about Bank of America talking about fund flows. I like to watch where the money's going. They say investors have pulled cash from global equity-focused mutual funds for at least 5 weeks. We're talking about yanking $4.5 billion in the most recent period, according to some data that they track. So we are seeing investors continue to pull out of the equity trade.
Okay, I don't want to speak too soon, but it's remarkable to note how much less we're talking about the questioning what the Fed is going to do before this policy meeting decision comes out on Wednesday. Of course, we'll have live coverage of that here at Bloomberg, but it's remarkable that, you know, it's kind of settled fact that it's 75 basis points at this point.
But as our survey of economists here at Bloomberg say, does Jay Powell start to say, you know what, we've done a lot, we're going to start lowering it for the rest of the year. We'll see if the tone is talked down. It's going to be a big, big meeting. All right, we're going to be back in less than an hour's time. We're going to continue our cross-platform coverage on the markets and what you need to what you need to know. Man, can you feel like it's Friday? Our cross-platform coverage, radio, TV, and YouTube. We will count you down to the close on this Friday.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stenovic, and you're also watching us on YouTube. And, of course, a big story that we just got, and that is Steve Bannon, of course, a key Trump insider, found guilty by a Washington jury of defying a subpoena from the Congressional Committee investigating the January 6th attack on the U.S. Capitol, reached after 3 hours of deliberation by the jury today. And we have the perfect voice to talk about what this means, joining us in studio.
June Grasso is the host of Bloomberg Law, weeknights at 10 p.m. on Bloomberg Radio. June, what does this mean for Steve Bannon? Help us understand.
My first question is why it took the jury 3 whole hours to reach this
I was
decision.
shocked to even see that this decision had crossed so quickly. I mean, he was just put on trial.
But you're saying, why did it even take that long?
Why did it even take that long? I mean, the case, basically the case is, did you get the subpoena? Yes, you got the subpoena. Was it a valid subpoena? Yes. And he didn't show up, and he didn't send any documents. He didn't do anything. So that was, the case was really a lot of this. I mean, this was supposed to be the misdemeanor from hell. Remember, Bannon said, this is going to be the misdemeanor from hell for Nancy Pelosi and Chuck Schumer. He didn't even put on a case. He didn't
What was that issue?
Well, at issue is that he was subpoenaed by the January 6th committee, and he didn't show up. I mean, he didn't even do what Mark Meadows does. In other words, if you show up and you say, you take the 5th or whatever, you refuse to answer on the basis, that is not defying the subpoena, but he just ignored the subpoena. There was evidence that even he put on, social media, he sort of was gleeful about defying the subpoena. So really the defense was, I mean, they went for things like, well, maybe Congressman Benny Thompson's signature didn't look the same on this document as it did on that document. And then there was that whole thing about, he was prevented from testifying because of executive privilege, which former President Trump never asserted at all. It was proven. So there was, and they even went for the fact that the government witness, the government attorney, was in a book club with the prosecutor years and years ago. They both were book club dropouts,
Gotta watch out for
apparently.
those
So
clubs.
why Steve Bannon here instead of other members, instead of members of Congress, perhaps, that
Well-
the committee wants to see testify?
Well, members of Congress, they are not enforcing, they're not trying to enforce any subpoenas against members of Congress.
not?
So it's because of it's a congressional, it's
'Cause
internal
it's same team
congressional
type of
things.
thing?
You know, I don't know the specific reason for it because it's not really a legal reason. It has to do with the politics of Congress. And so they're not going to, they haven't subpoenaed any members of Congress.
Haven't is the key word there, right?
They're not going to force them to testify,
Okay.
though they want them to testify. But Steve Bannon was a regular witness. He wasn't a member of the executive branch at the time. He was an outside advisor. And so there was no reason for him to defy this subpoena. And now you're seeing with this that the committee is going to be able to use this sort of as maybe you'll see other people who have been trying to defy subpoenas
Like
don't want to
Peter
come.
Navarro?
Well, Peter Navarro is another one who is, I think he's being prosecuted for defying the subpoena.
He's facing similar charges for failing to cooperate.
So that's a different situation. But I'm talking about the people they talk about at the hearing last night.
Right.
In other words, Congresswoman Cheney said more people are coming forward, and then someone else said that more people are getting their own private lawyers. For example, the Secret Service
Right,
agents.
you
So
did say
now
that.
that they have this example of this subpoena being enforced.
So I'm just thinking somebody's in the car, somebody's at home, somebody's listening, or this is going to come up over martinis tonight, as everybody gets ready for the weekend. And they're saying, did you see this thing, the headline about Bannon? He's found guilty of contempt. What does it really mean?
It means that he's going to prison for a short period of time. It was 2 counts. The minimum, the judge has to sentence him to some prison time. The minimum is 30 days on each count, up to a year. So it means that he is going to go to prison. Now, will it be put off while he appeals on a million different appellate issues that they're going to come up with? Maybe, but maybe not.
So-
Maybe the judge is going to say, this judge has been pretty tough. He's a Trump-appointed judge, but he's the one that, knocked out most of Bannon's defenses and said, I'm not fooling around here.
So at the end of the day, June, what does this all mean for President Trump?
Well, I don't think it means anything for President Trump.
It doesn't?
No,
It doesn't
I
mean
don't see what it
anything
means for President Trump.
when it comes to Bannon perhaps providing information that could lead to the prosecution of Trump?
Right, because he offered to testify before the
But
January
it's
6th
too
committee.
late. It's too late. The thing is, he's defied the subpoena. He defied the subpoena for a year or so. So in order to, the rule of law, you have to obey subpoenas. And now you have to obey specifically this congressional committee subpoenas. So it doesn't matter if he even goes
Will he go before the committee? We just got about
Well,
20 seconds.
By the way, he said that he would, but so far, from what I understand, he has not given any documents even or made any attempts to get to the committee to say he'll testify.
But if he's found guilty of contempt, does he now have to go
No.
before the committee?
No.
But he has to do
doesn't.
jail time.
He has to do jail time.
I'm so confused.
It's not really confusing. He
The
defied the
implications of it,
subpoena
yeah.
and he goes to jail, and that's all it is.
All right.
Can we
Well, that's why June
can we
does
do
the law show
can
and we
just do
don't,
the
Carol,
martinis
okay?
now?
That's why June does the law show.
I know.
I
She's
would
always
love to do martinis.
June Grasso. Catch her. What time can we catch the law show?
10 p.m.
All right, on Bloomberg Radio.
All right, to Nancy Lyons, we go in Washington, D.C. Hey, Nance.
Well, you've been talking all about it. The guilty verdict was reached in the contempt of Congress trial of former Trump advisor Steve Bannon. It took jurors less than 3 hours to reach their decision. Bannon was accused of failing to comply with subpoenas that were issued by the House Select Committee investigating the January 6th riot. Prosecutors in their close said that Bannon chose allegiance to Donald Trump over compliance with the law. Bannon's attorneys decided against putting on a defense. Bannon could receive up to 2 years in prison. Well, the January 6th committee says there is still work to do and witnesses to question, so more hearings could be coming this fall. Already, they've held 9. Bloomberg's Irv Chapman has more from Washington.
Representative Liz Cheney played an inflammatory recording of Trump advisor Steve Bannon, who's among those belatedly agreeing to give testimony.
We have received new evidence, and new witnesses have bravely stepped forward. Doors have opened, and the dam has begun to break. Our committee understands the gravity of this moment. We have much work yet to do, and we will see you all in September.
Cheney asked rhetorically whether a president who behaved as irresponsibly as the investigation demonstrated can ever be trusted with any position of authority again. In Washington, Irv Chapman, Bloomberg Radio.
Lee Zeldin, the Republican candidate in the New York governor's race, is back on the campaign trail after being attacked on stage last night by a man trying to stab him.
We have a little bit more security than we had last night. But we absolutely were going to continue the rallies.
Zeldin is criticizing the bail release of his attacker. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. Carol Master, Tim Stanovic. A lot going on in the world of crypto. And what was interesting is we are seeing, in some ways, over the past 10 days, investors scooping up about $1 billion worth of crypto-exposed companies. This is according to a report we published on Wednesday by Vandertrack. So they were buying things, Tim, like Marathon Digital, Coinbase Global, Riot Blockchain. I mean, after the carnage, people are finding some opportunities.
At the same time, Carol, we're starting to see some legal action taken against people. Three have been charged in the first ever cryptocurrency insider trading tipping scheme. To get some information on this and more when it comes to crypto, we turn to Kathy Kraninger. She is former director of the Consumer Protection Financial Bureau, also vice president of regulatory affairs at Solidus Labs. Kathy, great to have you back with us, joining us once again from Washington, D.C. How are you?
I'm great. Thank you for having me back. It's definitely a busy time in crypto.
Yeah,
like
it really is.
Well,
I want to start with this Coinbase news that three have been charged in the first ever cryptocurrency insider trading tipping scheme here. Are we going to start to see more legal action taken against those in the crypto industry?
Well, this just demonstrates that this industry is, in fact, obviously regulated and subject to the law. And as was said by the U.S. attorney, fraud is fraud. So the indictments are fairly clear. Obviously we'll see how the case carries out, but it is critical to see rules be enforced. And I'd also note that you see in the indictment that Coinbase had policies in place and was in fact monitoring the behavior of their employees, which again is what a responsible market participant would do and what you would hope and expect from them. So I think, again, it just demonstrates that there are responsible actors in this space and that people who are engaged in wrongdoing and fraud should, in fact, face prosecution.
Is it also, I mean, is there a silver lining to this in that it shows that the industry is growing up and it's essentially on solid footing in the sense that regulators are taking it seriously?
No, I think that's true. You see definitely a maturation process, regulators understanding the industry better. But as I said, if you go back to the lesson here, I think it really is, fraud is fraud no matter where it happens. And that's something that I think is important. There are absolutely new and novel things about digital asset markets and ways that we need to tailor things to make sure that you're treating, like activities in a like way from a regulation standpoint. But some of these things certainly are things that you see across the board wherever there is an opportunity to make money and where people see an opportunity to, unfairly take advantage of others.
I feel like it's not a new problem. We've heard this before. Kathy, all right, so three charged in the first ever cryptocurrency insider trading, one of the most read stories on the Bloomberg. It's an exclusive, and it talks about the Three Arrow founders.
Huge story.
Huge story. Once high-flying hedge fund saying that their bungled crypto speculation unleashed cascading margin calls on loans that should never have been made. So as more things continue to come out in different ways, but showing continued carnage, if you will, in different ways in the crypto world. What are the key problems, the key vulnerabilities in the crypto world, in your view, that need to be tackled by regulators?
So there are definitely things, as I noted, that make this space more unique and areas where there needs to be some more conversation. I think the Lummis-Gillibrand bill certainly is an attempt at getting to some of those gaps in a more comprehensive treatment in the U.S. And there are other bills, too. Obviously, Senators Stabenow and Bozeman are I guess, on the really about to introduce something. And you've got the House bills, too, where there's a lot of activity and even an imminent stablecoin regime perhaps coming. And so, that's all positive to see that bipartisan activity. Now, again, whether
There's something
any
like
of that gets
50
enacted or
digital
not,
asset bills, out there or something. I mean, if you had to pick one or two things that you're like, okay, this is what we've got to get down in order for this industry to really kind of grow legitimately and comfortably and securely.
One of them is definitely, the way we talk about it, the taxonomy, the terminology. Stable coins, of course, imply that they are stable, and that certainly implies backing and reserve. And so that's a conversation that obviously the stablecoin bill will seek to address, and where clearly new authority needs to be granted to agencies in terms of and requirements around that really Congress is best placed to act on. I guess that's one example I would certainly provide.
So help us play that out and what that would look like, Kathy, because I've been thinking a lot about stable coins because of the collapse of Terra, and I'm wondering if a bill would basically say, okay, well, this type of stable coin is allowed, maybe one that uses cash or commercial paper or cash equivalents in terms of like what people pull out of tokens. There's an equal amount of money backing it up in a safe somewhere on a balance sheet somewhere, but maybe the algorithmic stable coin, that's not okay?
So I am definitely not going to get into the weeds on that, because I think it depends on how these things are set up, and certainly, again, putting the disclosures out there to the public to show what is in fact behind. I mean, I guess I can say there are good actors in this space who are demonstrating that they are in fact backing their stable coins, their tokens, and that they are, engaged where you can actually hold the peg, and that people are actually getting the value out of them. And certainly for DeFi operations, stable coins are essential. So I think it really is definitely getting some of that out. I note, though, that big debate is around what the role of banks in this, and so that is definitely a dynamic that Congress is going to weigh in on.
So, Kathy, I do wonder about something like crypto and/or blockchain, that it could really crisscross a lot of walks of our world. So who needs to oversee it? Or is there going to have to be a couple of major departments within the federal government that have to oversee it, or in the regulatory side of our government?
Yeah, it's a great question, and I'd say it really is a whole of government approach. I mean, there were things that the president's executive order demonstrated, that there are facets of this that affect certainly national security and financial crime, and then you look at all of the use cases for what blockchain can bring to any ledger process or transaction process. And you think about healthcare and transportation and supply chain. And so there are definitely a lot of different applications for the technology and things that need to be thought about here. But certainly as it comes to financial services, if you're engaged in this financial product space, you have kind of the existing regulators that are coming to bear, and I think they're all working through how they can coordinate better, and that's something I would encourage, because you are going to have different regulators. There's no doubt about it who have a role, but it's how they coordinate together and then send that clear message to the industry about what the rules are.
Okay, Kathy, one thing I've been thinking about in addition to algorithmic stablecoins a lot is utility here when it comes to crypto. And I guess, and I ask this question all the time because I think with the carnage that we've seen over the last few months, $2 trillion in wealth just completely wiped out. And billionaires lost money, but some people, normal people lost everything. And I wonder about utility here beyond speculation. Sell us on the utility of this technology.
So this is something that is definitely something that's been asked about over and over again. I mean, the blockchain technology really is, secured by the token and mining and, all of that mechanics. And that's where the digital asset markets are based. And so, people are saying, what is this in the future? I'd say it's, again, all of the use cases that we were just talking about are frankly, they don't come without the tokens and the digital asset markets. And so that's the part that will be interesting to see. So many parallels to, the 90s and even you mentioned Terra with the 2000 .com burst, bubble burst then. But I would say it's really incumbent on the industry to move together smartly and start demonstrating all of the things that will be built on this, and the fact that we're operating, with integrity, that we're providing disclosures and clarity and transparency. And that's where companies like Solidus Labs come in too, as we're really pushing market integrity.
Right, and certainly in terms of surveillance and monitoring. Kathy Kraninger, she's former director of the Consumer Protection Financial Bureau and vice president of regulatory affairs at Solidus Labs, joining us on the phone from Washington, D.C. As for Bitcoin right now, $23,000, $131. It's moving around fast.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Hey, everybody. This is Bloomberg Business Week, the Friday edition. Carol Massar, Tim Stanovec. We're going to get to one of the most read stories on the Bloomberg terminal, very relevant to something that's happening next week.
Is that thing maybe perhaps a two-day Fed meeting?
Could be.
Okay, yeah. Steve Matthews, economics reporter for
Do they
Bloomberg
serve
News.
sandwiches and iced tea, do you think?
I'm sure they're...
Arnold Palmer's,
It's a
perhaps?
long day for them. They got to stay, hydrated in these hot temperatures. Speaking of hot temperatures, we're going to go to Atlanta to speak with Steve Matthews in just a few minutes. First, though, Charlie Pellet, we got less than a half hour to go to the close.
And we have got the Dow, the S&P, NASDAQ all in the red right now. S&P 500 index down 40, a drop of 1%. The Dow is down 154, down 0.5%. NASDAQ down 232, a decline of 1.9%. Stocks are falling as disappointing results from social media firms and weak economic data add to recession fears. Treasuries are rallying as traders dial back bets on Federal Reserve rate hikes. The 10-year up 28.30 seconds, 10-year yield 2.77%. 2-year yield 2.98%. Spot gold up $4 the ounce to $17.23, up by about 0.3%. Bitcoin is down 0.7 to 22,970. West Texas Intermediate crude down 1.6%, 94.81 for a barrel of WTI. Wall Street's looking ahead to a busy week next week, a week packed with more earnings and that Fed meeting. Kate Moore is head of thematic strategy at BlackRock Financial Management.
We want confirmation that the inflation data is rolling over, not just 1 month, but a kind of a sustained few months, which I think is also going to be incredibly important for the Fed. We're not expecting a big forward guidance from the Fed. I think we know that's off the table in the near term, but some sort of softening in language that perhaps they can decelerate the pace of rate hikes.
And we'll have more on the Fed coming up in just a moment with our Steve Matthews. Social media companies saw nearly $90 billion wiped off their stock market values today after disappointing revenue from Snap Inc. Snap shares down now by 39%. Among some of the other social media names, Meta, the parent of Facebook, down by 7.5%. Google, parent of Alphabet, parent of Google, down now by 5.7%. Recapping, we've got the 10-year at 2.77%, S&P down 1%, and that is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. Well, this is one of our most read stories on the Bloomberg. I talked about it with our TV colleagues. Coming just 5 days before the next FOMC decision right here in the United States, this story about a narrative among economists that an aggressive Fed may already be starting to think about, slowing down.
The story by Steve Matthews and Serena Yu. Steve Matthews is economics reporter for Bloomberg News. He joins us now from our Atlanta bureau. So, Steve, you and Serena writing that Powell is seen slowing the Fed's hikes after 75 basis points next week. This is according to economists surveyed by Bloomberg. What did we learn from the economists we surveyed, and how did we survey them?
Well, we surveyed them over the last week, and basically we're asking what their predictions were for this meeting and for Fed rate hikes over the next couple of years. And what we found out was that there is a strong consensus that we're going to get 75 basis points next week, which perhaps isn't a surprise. That's kind of been locked in and signaled by a lot of the Fed leaders. But then we start to get a pivot. By September, we get 50 basis points. And in fact, the markets have been back and forth on whether we get a half point or 3/4 of a point in September. The economists are pretty strongly believing we're going to get 50 basis points. And then the rest of the year, we get just a 1/4 point. And our rates peak in early 2023. And, perhaps because the economists have a relatively dour view of the economic outlook and there's a lot of concern about recession, there's an expectation that by the end of next year, we're going to start seeing rate cuts. Some of this is going to get reversed.
I kind of agree with him. Steve, okay, and because I love the economist world, I did study economics. These surveys, do they often get it right?
Well, it's funny because it's like I was looking back at the inflation projections from 2021 and the average projection, the median projection of economists then was we would have 2.5% inflation this year, and 2% the next year, and it's like, yeah, these forecasts are not all that great. And as people have pointed out, perhaps more optimistically, is that you have a lot of economists who are predicting recession, and those recession forecasts are also not always all that accurate. So maybe we'll avoid the worst of it.
One thing I just want to follow, though, and we talked to, Tim and I talked about this, Steve, with Vince Signorella of our Bloomberg team here, about what's going on in the bond market. And I do continue to focus on this 10-year note that can't seem to get above 3% again. And it does look like the bond market feels like we're maybe settling in at a level potentially.
Yeah, that is absolutely right. And there is, when you look at the forward-looking economic indicators, there are strong signs that the economy is slowing. We'll get GDP next week, and, there are some tracking estimates that suggest that second quarter GDP could be negative. Some of the anecdotal data in the Fed's Beige Book a couple of weeks ago was showing, a strong slowdown. So we know gas prices have come down. So there's some signs that the economy is decelerating, but the view from Fed Chair Powell has been, I want to see the whites of the eyes of inflation. We're not going to believe that we have this forecast that things are going to get better in terms of prices. They want to see it, and they feel somewhat embarrassed over their forecast and getting inflation wrong, and so there's a high degree of conviction that they're going to do whatever it takes to get inflation lower, even if it causes some pain.
So what could change between now and the end of the year that would cause economists to change their consensus? Like if we got some inflationary numbers that showed that we are not peaking, as the CEO of Bank of America said yesterday, when it comes to inflation, then could that change things in terms of how economists are thinking about the rate hike path from the Fed?
Yeah, but both inflation and unemployment could change things. If there were a pickup in inflation, people are not predicting that, but if that were to happen, that would certainly imply a higher rate path over time, and a higher terminal rate. On the flip side, if unemployment starts going up, right now the Fed has a dual mandate, but as they've been saying, unemployment is low right now, inflation is high, so they're all focused on what they can do about inflation, but that could change. The other side of the mandate could definitely come into play, and at that point, you'd start to see some of the economists change their forecasts and look for a lower path.
All right, gotta say, I'm getting excited for the next week FOMC meeting. Steve Matthews.
It will be exciting.
Right? I know what Jay Powell and company have to say. Steve Matthews, economics reporter at Bloomberg News from our radio studio in Atlanta.
Well, let's go from Atlanta now to Washington, D.C. for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. The verdict is in. Former Trump advisor Steve Bannon was found guilty this afternoon by a Washington jury of defying a subpoena from the Congressional Committee investigating the January 6th attack on the U.S. Capitol. Bannon spoke shortly after that decision.
I want to thank the jury for the effort they did, the judge, particularly the court administration here, everybody. I only have one disappointment, and that is the gutless members of that show trial committee. The J6 committee didn't have the guts to come down here and testify in open court. Thank you very much.
Bannon's attorney says they have multiple reasons for an appeal of today's verdict. Bannon was convicted of 2 counts of contempt of Congress, and each count carries up to a year in prison and a fine of up to $100,000. The House committee investigating the January 6th insurrection says it is still receiving information and may hold additional hearings this fall. Last night, lawmakers outlined what former President Trump was doing or not doing during the insurrection. Jennifer Rogers is a former federal prosecutor with SDNY and a current lecturer at Columbia Law School. She weighs in on the chances of criminal charges in the case.
I think it's way more than enough to justify and, in fact, necessitate an investigation by Merrick Garland's Department of Justice. And I suspect that when they dig in and get that corroboration, issue grand jury subpoenas, interview all the witnesses, and so on, that it looks to me like there will be enough for criminal charges.
Jennifer Rogers spoke earlier on Bloomberg Balance of Power. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser, along with Tim Stanovic, live in our Bloomberg Interactive Broker Studio, streaming on YouTube. Can I just say?
Say it.
So I walk to the train, sweat, because it's really hot. Get on the train, air conditioning, yeah, and get off.
Where's this going?
Then I get off and I'm like, I'm going to do a Twitter poll. And so I said the question was Friday mindset, and I gave you choices.
Okay.
Snap results,
Yeah.
next Fed meeting, or the heat.
So like what people are thinking about.
Right. What's on their mind is Friday.
Okay.
I will have to say, and
Very scientific.
I really appreciate our audience. Yes, very scientific. Next Fed meeting took in about 54% of the vote. The heat took 40%. And I got to say, I think the heat would get my vote.
Well, look, I think it's also regional, right? You've got a global audience for your Twitter poll, Carol, and people all over the world
I thought you
care
were going to
about.
say it's not the heat, it's the humidity.
Well, it's both this weekend. Let's talk a little bit about our latest from Brian K. Sullivan. New York is set to swelter Sunday under summer's hottest temperature.
We're talking like 100 plus on Sunday. I have this app, and I was like just checking to see how high things were going to get and if there's going to be any wind. Sweltering heat's going to grip New York and the U.S. Northeast this weekend. Temperatures could hit, as you said, 99 in Manhattan Central Park on Sunday. That would be a record high for the date. New York, Washington, other cities along the Interstate 95 corridor will be getting a taste of record-setting heat that has borne down on Texas, Oklahoma, and the central U.S. for weeks, right? Those weather patterns move across the country.
The last time that July readings reached 100 degrees in Central Park, that was back in 2012, according to the Weather Service website. The
Not
highest
so long
reading,
ago.
Yeah, it's not that long ago. Here's the highest. You have to go back to 1936 for the highest reading.
Don't remember.
106, July 9th, 1936.
That's a long time. Well, and this is what they talk
Were the
about.
thermometers as accurate then? That's what I want to know.
Like you do wonder, right?
Yeah, I do.
Were there chips really fueling those thermometers?
Hey, serious electricity concerns.
Don't you think about this?
Yeah.
With the AC like pumping away?
Yeah, millions of homes are going to be cranking air conditioners to cope with the heat. Electricity demand is expected to soar to around 29 gigawatts in New York, Carol.
Tim, it's not the heat, it's the humidity.
It's both for
I
me.
would, yeah, exactly. All right, stick around, everybody. This is Bloomberg Radio.
News, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. With the Dow, the S&P, NASDAQ all in the red. We're on track, though, for a winning week. Looks like a gain right now of more than 2% on the week for the S&P. Today, though, the S&P in the red, down 48, down 1.1%. We've got the Dow down 217, down 0.7%. NASDAQ lower by 254, down 2.1%. 10 years up 28.30 seconds. 10-year yield 2.77%. The 2-year 2.98%. Spot gold at $17.23 the ounce, up 0.3%. Bitcoin now down 2%, 22,664, and a retreat today for West Texas Intermediate crude down 1.8%, 94.61 a barrel. Stocks are lower as disappointing results from social media firms and weak economic data add to recession fears. As for social media companies, Snap Inc., parent of Snapchat, is plunging 39%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
This editorial was written by the Bloomberg editorial board. Global food prices were already lofty before grain-producing Russia invaded wheat-exporting Ukraine. To make matters worse, fertilizer prices have more than tripled in recent years, due in no small part to Russia's dominance of the market. Farmers from Brazil to Burundi are paying a steep price. Many have been forced to cut back on nutrients. Others are leaving fields fallow. The world's top priority should be to ease the supply crunch and avoid significant damage to the next harvest. That means pushing for states such as China to remove barriers on fertilizer exports. Existing support programs such as the Africa Fertilizer Financing Mechanism should also be expanded. Ukraine has demonstrated that the global food supply is more precarious than many had thought. It's a warning sign that the world can't ignore. This editorial was written by the Bloomberg editorial board. For more Bloomberg opinion, please go to Bloomberg.com/opinion or OPIN Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we just have about 10 and a half minutes left in today's Friday trading session, so we're getting ready to wrap up the day and the week. We're just coming off our lows of this session. I'm looking at the last 5 days. I mean, we've had quite a rally underway this week.
Yeah, we have. Look at that. And even the month, Carol, we're up 5% this month on the S&P 500, even with being down more than 1% today.
You don't have to be afraid to open up your 401ks soon, maybe.
Maybe. I mean, we're still sub 4,000 in the S&P.
That.
Let's get into it with Michael Sheldon. He's Executive Director and Chief Investment Officer at Hightower RDM Financial Group, joining us on the phone from Westport, Connecticut. Michael, good to have you back with us. How are you?
Good. Thanks very much for having me.
Okay, so tough year, 2022 so far, but we've still got a few months left. We've wrapped up the first half of the year. Here we are in month 7 at this point. Give us an idea of where you're seeing opportunities right now, because a lot of people we talk to say, hey, the choppiness, this is going to continue.
Yeah, well, this week was, looking back this week, there were some encouraging signs, I think, although it's still a little early to signal the all clear. Some things we were watching this week was high beta stocks outperformed low volatility stocks, below investment grade bonds, so the credit side of things perked up a little bit. We saw some better performance in semiconductor stocks and consumer discretionary stocks. So those are all positive signs. And for the first time since the market high in January, we saw more than 90% of stocks on the NYSE have a positive day. So that was on Tuesday. So those are definitely some encouraging signs.
Carol was off that day. Is there any correlation there?
I'll leave that to the to others.
It is true. When I'm away, usually is when the markets sell off. So I don't know what happened on that day. No, but our Kriti Gupta talked about it earlier in the week, right? when we see market moves, a thin market or little participation, either direction tells us one thing. But when we see a broadening of breadth to the upside or downside, that tells us something significantly. And we saw a broadening of breadth to the upside this week, and that's a positive.
Yeah, you're absolutely right. But I think you also have to look at the weight of the evidence. So we're still dealing with a lot of macroeconomic uncertainty. The yield curve is inverted right now, so that's a spread between 2-year and 10-year notes. Unfortunately, that inversion has historically led to weaker economic data. The dollar continues to be fairly strong, and that's a headwind for U.S. companies. A lot of companies are mentioning the dollar in the reports. And weekly jobless claims have started to trend higher after reaching, I think it was the lowest level in 55 years last year.
Yep.
So we still face some macroeconomic headwinds. I think as we go through earnings season, so far things look okay. Starting the second quarter earnings season, earnings estimates were for about a 4% increase, and now we're at about 4.8%. So that's pretty good. And more importantly, looking ahead to 2023, coming into this quarter, the earnings estimates for next year were about roughly 9.4%. Today we're at 8.7%. So we are starting to see some of the earnings estimates come down, but not as much as you would expect, considering the uncertainty we're facing.
So, Michael, what are the reasons why it's still too early to signal the all clear? Is it because of things that you just mentioned, including those weekly jobless numbers coming up for the 3 weeks in a row?
Yeah, I mean, the U.S. consumer represents about 2/3 of the overall economy, so it's really important to sort of have your pulse on what's going on for the consumer. So far this year, the U.S. economy has generated about 475,000 jobs per month, and that's a pretty good number. However, weekly jobless claims, as I mentioned earlier, are starting to drift higher. And that indicates, you've heard comments from a number of technology companies that they're starting to either reduce their hirings or lay some workers off. And another thing we watch, which is more leading, is the leading economic indicator, which came out this week, and that's declined in 5 of the past 6 months. And the reason that's important, it tends to sort of forecast the direction of the economy looking ahead over the next few quarters. So right now, the Fed is laser focused on reducing inflation, and as long as it does that, we're likely to see somewhat weaker economic growth before things ultimately turn around when inflation peaks and starts to come down.
When inflation peaks, Carol?
Yeah.
That's the question, right?
Well, and the thing is, help me out here historically. I think I've been reading some things that talked about that once inflation does start to come down, it kind of comes down rather quickly. Are you anticipating that that's what we see? Because I think there is also some concerns that the Fed is going to end up being too aggressive and maybe overdoing it. But it's not, an exact game or exact science here, right, when it comes to rate moves and the impact on inflation and how quickly it comes down.
Well, that's a challenging thing for investors and for the markets right now. We are starting to see some signs that inflation is peaking. I mean, right now, inflation, the CPI number is at about 9.1%, which is the highest level since 1981. So we're at 40-year highs. So a lot of investors in the market today haven't seen this kind of inflation. But I think we're starting to see some signs that inflation may be peaking. For example, the job market is starting to soften a little bit. Commodity prices are starting to come down, whether you look at things like copper, lumber, steel. And the housing market is also showing signs of slowing. Freight rates overseas for shipping goods are starting to soften. So you put this all together, and it seems likely that we should start to see softer inflation data as we head through the fall.
Well, what about peak inflation here? We just heard from Steve Matthews in our Atlanta bureau, and he's got this survey of Bloomberg economists who are essentially saying that, okay, expect a 75 basis point rate hike next week, but then we're going to start to see the Fed put the brakes on a little bit. Do you think we're going to see a cut in 23?
It's interesting. You hear more and more economists actually calling for a peak in rates at the end of December. So that means, as you said, we're likely to, when the Fed meets next week, we're likely to see another 75 basis points in increase. So that would leave short-term rates at about 2.5%. And then we have 3 more meetings. So we could have a half-point increase in September. That means 3%. And then maybe 2 more quarter-point rate hikes in the last 2 months of the year, which would leave rates at about 3.5%. At that point, I mean, that's an eternity from now, looking at the markets. But at that point, we could very well be in for a pause. It sort of depends a lot on the incoming economic data.
Right.
And the Fed has continued to say they're monitoring the data.
Yeah, I feel like this is going to be an important meeting in terms of if we do see Jay Powell starting to talk down, that maybe they could be a little bit less aggressive. But we will know in about 5 days' time from now. Hey, Michael Sheldon, thank you, Executive Director, Chief Investment Officer at Hightower RDM Financial Group, joining us once again on the phone from Westport, Connecticut. We are getting ready to wrap up the trading day and the trading week. Those equity averages just coming off their lows, but still almost down 2% on the NASDAQ, a 1% decline on the S&P and the Dow, right now off about 0.5%. But for the week overall, we are seeing gains of more than 3% in the NASDAQ, 2.5% for the S&P 500, and right now looking at the Dow with a gain of almost 1.8% for the week overall. So we've definitely seen much more of a risk-on trade. All right, coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just about 2 minutes away from the end of your trading day, your trading week. Caroline Hyde, Shonali Basak, and Kriti Gupta in for Taylor Riggs, counting you down to the closing bell here. To take us beyond that very bell is a global simulcast. As always, Carol Massa, Tim Stenovic. We go cross-platform, TV, radio, YouTube to say that it was a decent week, but a pretty poor day.
Yeah, absolutely. That's interesting that you said that. I was just looking, Caroline, at the week overall. We've had some pretty strong gains in those overall major equity averages, and definitely a risk-on trade. But if you look at the trade today, most of the major industry groups in the S&P 500, guys, are down today. So going into the weekend, it feels like nobody is looking to take on risk.
Yeah, that's kind of the big takeaway that I just had from our conversation with Michael Sheldon, who's Executive Director and CIO over at Hightower RDM Financial Group. He said it's still too early to signal that everything is clear, though we did get some positive signs, Kriti, over this last week. We saw solid breadth with Tuesday's rally, something that I know you talked to us a lot about earlier this week and you focused on. And so far, things look okay with earnings, but hey, those jobless claims that we got yesterday, the fact that they're, increasing, drifting higher, not such great news.
Tim, I'm so flattered. You brought up breath. It's a very, it's an issue near and dear to my heart. I've been banging that drum all week long because it's such a key issue. You can't just have tech in charge. You can't just have energy in charge. Carol, I think, Shonali, I should say, actually, I think what's key here is that you want this to be kind of a environment where all boats are rising on the same tide, because that's really what you want. Economic fundamentals that support the picture. Whether we get back to that kind of level of normalcy is a different story, but we did see early signs of it this week.
Yeah, and I really feel the need to speak for Taylor, because you do have a yield curve that is more inverted today than it was when we started the week. So you have to wonder if that risk-on mood is soured when you look underneath the market and see some negative signs there in the bond market.
Yeah, we always go cross-asset as we do, but at this moment we ring the closing bell for the stock exchanges out there, the New York Stock Exchange, the NASDAQ. Much thumping, much bravado, but it is not much thumping that we see in the actual markets. We're down by 37 points, 3,961 is where we settle out on the S&P 500. The Dow Jones off by 0.4%, 136 points lower. We see the NASDAQ off by 225 points, down by some almost 2%. So wild confetti going on in the stock exchanges, but really it is a downward trajectory. And actually the small caps didn't look any prettier, down by 1.6%, Carol.
All right, and Caroline, I'm going to go into the S&P 500, so those big cap names. Take a look at the specific names for the week overall. The best performing stock this week was Bath & Body Works, up more than 21%. Bottom of the pack, I think, Tim, you talked about it earlier in the week, Verizon Communications. Shonali, it was down about 13% for the week overall.
Yeah, and let's talk about the day, let alone the week. You have some defensive trades really rising higher in the day, and they're really the only ones rising higher on the day. You have utilities, for example, rising 1.3% on the day, 1.4% really. You have real estate rising 0.8%. You have a sea of red below that. You have media and entertainment falling more than 4.3%. You have telecom also falling 4.2%. Semis also down 2.6% on a down kind of day, guys.
Yeah, exactly, right. So that takes a really good, clear picture of risk-off trade. So when it came to gainers, a little bit tricky, but I did find a few. And I talked about this earlier, those hospital names, really some outperformance across the board. And that was thanks to HCA and Tenet Healthcare, both coming out with some results that really just kind of floored the street and the expectations that were out there, despite concerns about weaker demand and higher labor costs. HCA Healthcare up more than 11% in today's session. Then I wanted to go to, and that was the top name in the S&P 500 500. Number one, also top in the S&P 500, was Schlumberger, and that stock was up about 4.3%, well off its highs of the day when it had more than an 8% gain, but still 4% higher at the close. The company raising its full-year sales forecast to at least $27 billion, citing a global expansion in the search for oil and natural gas. So one of the big macro themes of our world in 2022. And then I want to mention Tesla, up again, just barely on this Friday. But folks, it is up in the past 8 days, up more than 17%. We're talking about more than $100 billion added to the market cap over that time frame. We know we had a strong earnings report today. Bloomberg News putting out a story about maybe there's some short covering going on, but and those shorts had a pretty good year in the beginning of the year, but right now, not so much. It's really been a risk-on trade for Tesla, certainly in the past 8 days, Tim. 0.2%, that counts as a gain. It's in the grain. Look, an impressive few days for that company. On the other side, though, we have companies like Snap, the biggest decliner in my focus today, down 39%. This is the lowest since March of 2020. And you know what's pretty remarkable about this, Caroline? It's just the most in 3 months. The day after earnings last time. It fell 43% after that report. The company not only reporting revenue for the second quarter that came in below estimates, it blamed macroeconomic conditions for that, but also declined to give guidance for the current quarter. We saw this at other social media companies and other companies that rely on advertising. Think Meta Platforms, think Pinterest, think Alphabet, the parent company of Google. We're going to hear from some of those companies next week and the week after. More than a dozen brokerages cutting their recommendations on Snap stock and many more trimming their price targets. Carol, you mentioned Verizon finishing the day down by 6.7%, the lowest since August of 2018, and the biggest move since July of 2002. Verizon shares dropping after the wireless carrier said that it's cutting its forecast for the second straight quarter. It added to concerns that consumers are pulling back on spending. We heard from AT&T yesterday and saw AT&T fall after saying that consumers were slower to pay their bills, so that raised bigger macroeconomic questions. And finally, let's talk Mattel. Shares falling by 7% today after the company said second quarter margins shrank due to inflation, higher supply chain costs, and royalty expenses. Perhaps not surprisingly, CEO Ynon Kreiz pushing back a little bit and saying to us earlier in the day that the margin shrinkage was something that was telegraphed, but still investors punishing the company for that today. And again, no word on whether or not we're going to see an Elon Musk SpaceX action figure from the company.
Got to wait a couple of years for that, I think, yet. On tenterhooks. Meanwhile, I'm looking at perhaps that inflationary pressure, those supply side concerns that Mattel CEO was talking you through there. Easing a little bit if you're looking at the oil market today. We're pulled lower just by 1.7%. We're at $94, call it $95 on WTI crude at the moment. We are perhaps looking more at the economic data, the weakness there, than we are some of the supply side constraints. Metals actually pushed higher, and natural gas, still on the upside, up more than 5% as we see natural gas in Europe. Once again, Russia, Ukraine, front and center, so too is this heat wave that we continue to experience in large parts of America and in Europe. But I'm looking at what also is a surprise gain in certain parts of the metals market while we still have a weaker dollar. And I think the weaker dollar is all about the PMIs that came out, the weakness in the U.S. economy. Are we dialing back what the Federal Reserve has to do as soon as next week? Bloomberg dollar index off by 0.25%. We see maybe a flight to a bit of a haven in the currencies. Yen up almost a percentage point. Swiss franc also strengthening to the tune of almost 0.5%. And really this flight into bonds just crescendoing in Europe. This, as we saw PMIs looking very weak in Europe as well. In one point, we saw the biggest move in two-year yields in Germany since 2008. We saw German two-year yields finish the day 25 basis points lower. Portugal, 5-year, 28 basis points lower. Spain crushed down by some 30 basis points. This as we start to think that maybe the ECB is going to have to protect the peripheral bond market. But still, Madame Lagarde saying we are tackling inflation front and center, Kriti.
Yeah, I'm going to put my Taylor Riggs hat on here and bring it right back here to the U.S. yield curve in particular, because what's going on in Europe does have a direct effect on what's going on in the U.S. bond market. The idea that the bid here that you're seeing in German bonds that you just outlined, Caroline, well, some of that is translating into the U.S. session, in addition to the fact that you had those U.S. PMIs contracting a bit as well. And across the curve, from 2 years all the way out to the 30s, you do see a bid going into the bond market. And at the same time, the 2-10s curve remains inverted, down 22 basis points, Carol.
All right, some really important conversations observation. So I do think about what's going to happen next week. We have a chock-full economic calendar, and of course we've got that Fed meeting, but we're going to hear about GDP. We're going to get a read on second quarter. We're looking for kind of anemic growth, just barely growth after a decline in the previous quarter. So we'll see what that comes out, but we're going to hear about expectations among consumers, new home sales, and then of course what the Fed has to say, Tim.
And don't forget earnings. We got McDonald's next week. We've got the parent company of Facebook, Meta Platforms. We've got Spotify. We've got Ford, UBS, Unilever, Coca-Cola, Microsoft, Alphabet. We're going to get a really good read on the consumer, Shanali. By my count, we've got 220 companies in the United States reporting just next week. So between that and the Fed, I would go ahead and say it's not a summer week.
What do you guys care about? Earnings or economic news?
I think the tail wags the dog, doesn't it? Because you have the economic news and you have backward-looking, really, data that comes out and gives you exactly what you want to see about the last month. But then you have the earnings coming out and you're looking for that forward guidance. And the reality is you have more companies not giving you that guidance, or at least telling you that in the near future they may raise prices because they're still dealing with supply chain issues. And then you have to wonder how much some of those issues will continue to persist.
Shelley, you didn't answer the question. Economics or earnings? You got to pick one. I'll pick one. I think earnings is the story, because the economics, at the end of the day, to next week, it's the Federal Reserve, 75 basis points is priced into the market. You're already seeing that. What's not priced in is the uncertainty of what you're going to hear with the likes of Apple, with Microsoft, et cetera. So I'm in the earnings camp.
I'm so confused by what we're getting from various earnings, though.
Yeah.
I mean, I understand that Amex is a luxury perspective, but just the resolute buoyancy coming from that CEO, and then the market reaction we got to Snap and the worrying about slowing hiring and what companies are doing, we're going to get really different perspectives. I wonder how consistent a voice we're going to get from these earnings.
Yeah, and company after company, it feels like, and some big well-known names talking about slowing in hiring. Just as we leave, we just want to mention a headline. The WWE Chairman and CEO Vince McMahon retiring. We are seeing the stock a little bit lower here in the after hours. All right, that's going to do it. That's a wrap for our Beyond the Bell simulcast on radio, TV, and YouTube. Folks, have a good week, and we will see, though, our team and our audiences again, same time, same place on Monday.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, we do want to mention, again, WWE Chairman and CEO Vince McMahon, so identified with WWE, created this, right, for so many years, retiring, and we are seeing the stock a little bit lower here in the after hours.
We should note this comes after reporting from Dow Jones and the Wall Street Journal about allegations of misconduct happening at the company over many years.
Yeah, exactly. And we know that his daughter, Stephanie, was named as interim CEO. That was back on June 17, and that's when he was stepping back as his duties. So again, as you said, the Journal at that point, I think, was saying that WWE looking into some money paid to various employees. So nonetheless, though, a little headline on WWE today.
Let's get to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. Longtime Trump advisor Steve Bannon has been found guilty of defying a subpoena from the Congressional Committee investigating the January 6th attack on the U.S. Capitol. Bannon spoke outside the courthouse following the verdict.
In the closing argument, the prosecutor missed one very important phrase, right? I stand with Trump and the Constitution, and I will never back off that, ever.
Bannon's attorney says they will appeal the verdict. Bannon faced 2 counts, with each carrying up to a year in prison and a $100,000 fine. Former Treasury Secretary Larry Summers says what the U.S. economy needs right now to battle inflation is a tax hike.
I actually think that just the right thing to do is to raise taxes right now to take some of the demand out of the economy.
Summers tells Wall Street Week with David Weston, if taxes are raised, that money should not go to expanding social investments or maintaining a moratorium on student debt. Much like the Texas law, which allows individuals to sue abortion providers, California is now allowing people to sue those who distribute illegal assault weapons. They can also sue anyone who distributes parts that can be used to build weapons and guns without serial numbers.
We're not waiting for others to take action. We're taking action here today, and we are stepping in and doing something perhaps is the most impactful thing we have done in decades in the state of California.
Governor Gavin Newsom says California is leading the way on gun safety. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nancy, thank you so much. Nancy Lyons in D.C. So let's talk a little bit about some of the fads that are out there.
Are you going to drink some hard seltzer this weekend?
Nope.
No, I actually I've never been a fan of hard seltzer. But do you remember a few years ago, it was like all the rage, and you had all these companies coming in and launching new hard seltzers.
It's like cool stuff. Paul Sweeney was talking about it on air with Tom Keane this morning on Surveillance.
What did he say?
Paul was saying that all the kids are drinking hard seltzer down the beach.
Well, they're not drinking enough of it because we saw from Sam Adams, the parent company of Sam Adams, ticker SAM, Boston Beer Company, again, really bad quarter, all about hard seltzer. They own the Truly Hard Seltzer brand. And apparently, Carol, people aren't drinking it at the rate that they used to.
That's interesting. Well, I guess fads come and go. I would also offer up, there's a lot out there for people to choose from. I mean, I just feel like in the general beverage space, I'm always like, whoa.
I was having a conversation with my Quick Take colleague, Maddie Mills, about this earlier. And she said, hard seltzer's so over. She said, canned cocktails are now really what's hot. And I'm like, you're right. I was actually at a concert last month, and I was shocked to find that they were not just selling beers.
Like canned margaritas or something?
Yeah, and they're good.
Were they good?
They were good, but they're full of sugar.
I was just going to say.
I mean, they are good.
All right, speaking of fads, I have to say years and years and years ago, I had a lot of swatches. It was it was almost like a disposable watch, but they were kind of cool, plastic, but they were kind of funky.
Oh, yeah, my wife has a bunch of them. You can, change colors and depending on what you wear.
Right, they're really kind of cool. Well, they kind of went through, in recent years, kind of languishing, muscled out by the low end, by fitness bands, smartwatches, and all the thing. But I guess they've got now a high offering from the Swatch stable that's propping up its budget plastic sibling. It's the Omega Swatch Moon Swatch.
How much? $260?
I guess so.
That's not that. I mean, aren't Omega watches more expensive than that?
This one retails. Wait, doesn't it retail for? Oh, wait.
Oh yeah. Okay. Wait. This is okay. So the
for about
Moon Swatch.
$7,000.
Okay. Yeah. Okay. There we go. Yeah. 7,000. There we go. I was like, that seemed a little bit. But okay. So there is this. But the quartz-powered Moon Swatch is housed in a multicolored ceramic and bioplastic case. That only costs $260.
So there's one for each of you that are out
exactly
there. High end, low end, middle end. There's a swatch for each of you. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Snapping shares plunged 39% today. The Dow, the S&P, and NASDAQ all lower. Stocks fell as disappointing results from social media firms and weak economic data added to recession fears. Treasuries rallied as traders dialed back bets on Federal Reserve rate hikes while the dollar retreated. S&P down for the first time in 4 days, falling 37 points today, down 0.9%. The Dow down 137, down 0.4. NASDAQ down 225, down 1.9%. 10-year yield 2.75%. 2-year yield 2.97%. Spot gold up 0.3%, $17.24 the ounce. West Texas Intermediate crude down 1.8%, $94.62 a barrel. Alphabet shares down 5.8% today. The Google parent shares sank the first day of trading after that 20-for-1 split that brought its stock price down to the $100 price range. Recapping, S&P down 37, down 0.9%, and that is a Bloomberg Business Flash.
It is indeed. All right, Charlie, thank you so much. So next week we're going to get an earnings update from Chipotle Mexican Grill, but just this week, in fact, yesterday, we got an update on some new strategic investments that the company's made in Hyphen and Meaty Foods. This is all through the company's Cultivate Next venture fund. So we are so delighted to have back with us our next guest to talk about this.
Kurt Garner is Chief Technology Officer for Chipotle Mexican Grill. Kurt joins us this afternoon via Zoom from a beautiful Newport Beach, California. Kurt, how are you?
I'm doing great. How are you?
We're doing well. It's good to have you back with us. I wanted to get into this investment here and try to understand your thought behind it. What exactly are you looking to accomplish with Hyphen and Meaty Foods investments?
Well, we're very excited to make these first two announcements within the Cultivate Next Fund, and I think they reflect the diversity of the investments in the companies we're looking for. Meaty is a company that's found a clean way to raise nutritionally dense plant-based proteins.
We're talking mushrooms here, right?
It's the root of mushrooms. It's not the mushroom structure itself. And they found a way to raise these in stainless steel tanks just using water and sugar. And in 4 days can produce the equivalent amount of protein that a typical animal would reach at maturity. And so finding somebody that's innovating in the food space and looking to do things the way we do them at Chipotle with food with integrity and a clean, non-processed way was exciting.
Well, the timing is perfect because our Bloomberg Pursuits in the current issue of Bloomberg Businessweek magazine is completely dedicated to mushrooms, whether we're talking food uses for it when it comes to astronaut food and like developing food from fungi, mushroom leather, and then, of course, the psychedelics too, Carol.
Yeah, it's interesting, though, Kurt, where we're finding opportunities. What was it that in particular, because you guys can go probably a lot of different places because there's so much disruption going on when it comes to food technology or, food itself being innovated. Why is it something like Meaty pops up on your radar?
Well, certainly the food with integrity standards are non-negotiable for us. So finding the companies that are pioneering ways to raise food in a clean way, and then frankly, taste. Chipotle is based upon great food and great tasting food, and that's core to our experience. And we had Meaty come in and tasted the food with our culinary team and got the stamp of approval from our chefs. And frankly, the rest of the team that tasted the product, that it tasted great as well. And certainly for these companies to break through, taste is going to be the thing that wins the day.
Well, the natural question, of course, is does this end up on Chipotle's menu? Because I remember when Sofritas came out and how big of a deal that was.
I remember being in the test kitchen in New York with Sofritas and checking them out. So you guys really play around and make sure you get it right. So will it be in a product?
There's always the possibility. We have a robust product pipeline right now on the stage gate process to validate new recipes and menu items. And if a product gets through that stage gate, goes out into restaurants, we're proud to introduce it to customers and see what that reaction is. Meaty is very new for us. We just made the investment, just began our conversations with them a few months ago. So they're not in that stage gate pipeline yet. But certainly we see that there's a possibility, which was part of the reason that we decided to go ahead with the investment.
Well, Kurt, how much of And forgive me if this sounds like a stupid question, but I do wonder, like, how much is just, you guys have some investment money, you understand this space, and, you know, there's just so much you can do at Chipotle, but you also want to be involved in the innovation disruption that's going on in the food space more broadly. So how much of is it you just want it to be a good investment, and maybe you'll use it Chipotle, or maybe you will not?
Yeah, certainly we don't consider success being that it lands up in a Chipotle restaurant or on part of our menu. We do think that there's a possibility here with Meaty. We are about cultivating a better world. We're very proud that our food standards and food with integrity principles have led to a transformation of the food space, and very importantly, have changed the way customers look at and think about the food that they eat and how it's sourced.
Right.
So there's a balancing act there for sure.
Well, let's go from the actual food to food prep right now and talk about the investment in Hyphen, because this is a company that says it'll put your kitchen ops on autopilot. So is the idea here that you won't need to rely on people as much in the kitchens with the product like Hyphen?
And can I just say, your CEO, Brian Nickel, told me about it would be really kind of nice to maybe have something automated that could deal with all the avocados that you have to scoop out on a daily basis. That would be nice to be able to automate something like that.
Right. And I think that idea and the Hyphen idea are very closely aligned with each other. We believe in cobiotics. We don't think that automation has a role in our restaurants replacing the human experience and human interaction. But we do think that there are tools that we can develop and provide our teams to help them be successful and to meet the needs of our customers. So when we see the possibility of Hyphen, we think about it as it relates to our digital business, where customers already placed an order. They have no need to talk to the person that's putting the order together. The expectation is that we've provided our crew with all the information up front. And now it's just a matter of picking the food up off the shelf or having a delivery driver pick it up off the shelf. That seems like a really good place where we can add more automation and tools to help our teams with speed and accuracy with the enormous amount of orders we're seeing. We don't see that necessarily being the case on the front line, where our customers still want to have a conversation with our people. And certainly cooking our food is something that we're continuing to do with classic culinary techniques.
Well, it does sound like a great mix between, you know, humans and using, obviously, equipment to help you in the process. Kurt, looking forward to continuing this conversation. You guys really are giving us some information about kind of where the food space is going. Kurt Garner, he's Chief Technology Officer at Chipotle Mexican Grill, joining us via Zoom from Newport Beach, California, on this Friday.
Earnings next week.
Yep, indeed. So we'll be breaking them down. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, this is Bloomberg Business Week. I'm Carol Massar, my co-host Tim Stanovic here in our Interactive Broker Studio. We're going to catch up with our Alex Barinka. We've got a couple of things to talk to her, including...
That's Carol snapping. That was Carol snapping. Yeah, we're going to talk snap, and we're also going to talk about what this tech route means for diversity, because they've been on a push in the last couple of years. But if we see the market value of these companies come down, Carol, what does that mean?
Charlie, can you snap loudly?
Without a doubt. Here we go.
Nice.
Yeah, there we go. All right, let's begin with Snap Inc. Lower today by 39%. We've got more on the Snap story coming up in just a moment. With the S&P down 37 today, a drop of 0.9%. S&P down for the first time in 4 days. The Dow down 137, a drop there of 0.4%. NASDAQ today down 225, a decline of 1.9%. 10-year yield 2.74%. The 2-year yield 2.96%. Spot gold up 0.4%. 1726 the ounce. Bitcoin today down 1.7%. 22,728. And today we had West Texas Intermediate crude down 1.6%, 94.85 a barrel. So the S&P down for the first time in 4 days. Stocks fell as disappointing results from social media firms and weak economic data added to recession fears. Michael Sheldon is Chief Investment Officer at Hightower RDM Financial Group. He was our guest right here on Bloomberg Business Week. He says there's no shortage of worries for investors.
We're still dealing with a lot of macroeconomic uncertainty. The yield curve is inverted right now, so that's a spread between 2-year and 10-year notes. Unfortunately, that inversion has historically led to weaker economic data. The dollar continues to be fairly strong, and that's a headwind for U.S. companies. A lot of companies are mentioning the dollar in the reports.
Twitter after earnings today up 0.8%. Snap after earnings plunged 39%. Related, we had Meta, parent of Facebook, down 7.6%. Alphabet, parent of Google, down 5.8%. Both Meta and Google will be reporting next week. So again, recapping stocks lower, S&P down 37. That is a Bloomberg Business Flash.
It is indeed. All right, Charlie, some nice snapping there. Well, a few things we want to get to with our Alex Barinka, so well known to our Bloomberg audience, back with our team. First of all, we've got to talk about Snap.
Yeah, really ugly day for the company, hitting its lowest since March of 2020. But Carol, believe it or not, it's not even the worst rout that the company's seen in the past few years. Just 3 months ago, it fell more than 40% in one single day. Revenue for the second quarter came in below estimates. The company also declining to give guidance for the current quarter. Alex Barinka is technology reporter at Bloomberg News. She joins us on the phone from our Los Angeles bureau. Alex, you've had 24 hours to really dig into these Snap results and really see the way that they're affecting other companies that rely on online advertising. What are some big takeaways as we start to, get ready for Alphabet earnings and Meta earnings next week?
Yeah, I think it's a phrase that you all are probably hearing a lot lately. This idea of macroeconomic headwinds is what the company has been citing quite often, saying, look, there's some uncertainty in the market right now. The advertisers where we make our dollars from are slashing their ad budgets, and that's really impacting us. Now, Snap is the first of these kind of ad-dependent social media and internet platforms to report earnings, and they also are one of the smallest. So when you do look across the board, if you are an advertiser and you are trying to decide with a high degree of confidence where to put those dollars, Snap might be one place that you pull them back earlier than, say, something like a Meta or a Google, who tend to get a bigger share. But
Alex, should we assume that what we got from Snap means it's going to be bad news for Facebook or Google or so on, the bigger players?
I would assume, and the analysts I'm chatting to are also assuming that there will be some impact. Snap might take it on the chin a little bit harder than the rest. We are seeing, again, a 39% drop is almost unheard of, aside from a few months ago when they warned these results might be coming. But I would be probably expecting some color around this for Meta and Alphabet's Google next week, too.
Alex, are we still seeing the effects of iOS changes and the idea that you can't track a customer as easily across your smartphone with the changes that Apple made to its most recent operating system?
Absolutely. That is one of the things that Snap has cited here in these results, particularly because this kind of came into effect around this quarter last year. So that Apple change and what they do with it going forward is also a big kind of focus for them. They are saying they need to kind of roll out some more ad tracking tools and be able to better kind of combat that, to be able to appropriately give advertisers the degree of confidence that what they're spending is worth it on their platform.
All right, just want to mention Google was down 5.8% today, Meta down 7.6%. All right, let's get to a story that we've been wanting to talk to you. It's been on the Bloomberg this week, and this has to do about, the tech rat that we have seen this year and what it means for diversity. The industry has been pointed out for their lack of diversity. They've been working on it. What does it mean?
Yeah, it means that right now a lot of companies in Silicon Valley and in the tech world are freezing hiring or they're firing workers. This week, there was a great conversation between my colleague Kurt Wagner and the head of diversity at Meta saying, look, amongst this kind of uncertainty with us kind of reprioritizing and looking at our headcount, our diversity goals might also be in question. I heard this from Kurt, and it brought up this question for me, like, is diversity in tech just a fair weather sport? We've seen an increasing amount of focus on this. There have been some slow progress for the tech companies diversifying their workforces, but writ large, a lot of these companies' employee makeup still lags far behind the makeup of the broader U.S., say. So if I am somebody who is a woman or in a minority group in the tech industry, it looks like there might be some chipping away at some of the fragile gains that we've seen of these companies hiring folks who, frankly, aren't white men.
Well, but though, Alex, what do you, we say this a lot, Tim and I have in conversations, that a younger population is looking at companies pretty deeply and saying, well, wait a minute, what's your mix? What's your diversity? What's your inclusion? I'm going to pick kind of where I want to work.
But maybe when the job market is good,
That's
Carol.
true. That's true. But I do wonder, does a younger generation, will they pick and choose about where they can work, provided that they have a choice?
Yeah, I'll tell you, I'm a creature of the internet. I'm a millennial myself, and I see folks trying to kind of hold these companies to account, and it playing into their hiring or their job choice decisions. But the fact of the matter is, it seems like reading between the lines, what we're hearing here from Meta is if there are fewer seats to be had, then we're potentially hiring fewer of these underrepresented groups. So even if a job applicant's preferences are for a certain type of company, there might not be as many opportunities as there have been out there as we saw, say, 12 months ago when we were at the height of this, great reshuffling that we're seeing among workforces.
I feel like it's a similar thing to the ESG world, right? Like, yeah, I want to do good, I want to do good, but, when performance...
When stocks are only going one way up and that's up, then it's a lot easier to do that, right?
Exactly. Alex, so good to check in with you. Alex Barinka, she is Bloomberg News technology and social media reporter, joining us from our bureau in Los Angeles. It is amazing. You guys talked about Snap. I mean, what a sell-off today. But as you said, it's not even the biggest gain that we've seen in the stock recently.
Yeah, it declined May 24th, 2022, down 43%, Carol. But still, it's at its lowest level since March 19th of 2020. So it's down quite a bit.
Down 79% so far this year.
Remarkable. All right, let's get to Washington, D.C. for a check of the latest world and national news. For that, we turn to Nancy Lyons. Hey, Nance.
Thanks, Tim. Longtime Trump advisor Steve Bannon has been found guilty of defying a subpoena from the Congressional Committee investigating the January 6th attack on the U.S. Capitol. Bloomberg legal reporter June Grasso says she's surprised it took jurors 3 hours to reach a decision in what she called a cut-and-dry case.
Basically, the case is, did you get the subpoena? Yes, you got the subpoena. Was it a valid subpoena? Yes. And he didn't show up, and he didn't send any documents. He didn't do anything.
Grasso says Bannon will likely receive some jail time. He faced 2 counts, with each of those counts carrying up to a year in prison and a $100,000 fine. The White House says President Biden is doing better as he recovers from COVID. Press Secretary Karine Jean-Pierre.
His symptoms remain characterized as runny nose and fatigue with an occasional non-productive, now loose cough.
Karine Jean-Pierre says Biden is still putting in an 8-hour workday despite having COVID. Lee Zeldin, the Republican candidate in the New York governor's race, is back on the campaign trail after being attacked on stage last night by a man trying to stab him.
We have a little bit more security than we had last night, but we absolutely were going to continue the rallies.
Zeldin is criticizing the bail release, though, of his attacker. The U.S. Forest Service will use emergency authority to speed up efforts to protect sequoia trees from severe wildfire. The move allows the agency to immediately start reducing hazardous fuels in about 13,000 acres of sequoia groves on national forest lands. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Well, porcini, morel, flower shiitake, lion's mane. There are many, many mushrooms out there.
There are. And in the pursuit section of the new issue of Business Week magazine, it's all about mushrooms. Here to tell us more is Pursuit's editor, Chris Rouser.
There are mushrooms everywhere. You walk down the street, coffee shops are like, have our mushroom coffee. The vitamin shop is like, have our mushroom immunity pills. And, you know, psychedelic mushrooms, everyone's talking about it. The other day, I was on the beach in Fire Island, and someone came up and was selling magic mushrooms, not like in a subtle way. Like, they had branded mushrooms, and they were selling them at our green market in, like, psychedelic mushrooms in New York, openly selling in a green market. Like, it's really happening. It's happening in a lot of different ways. Mushrooms have been waiting underground for this moment.
That's Bloomberg Pursuits editor Chris Rouser. You can hear the entire interview on our Business Week weekend show tomorrow at 8 a.m. on Bloomberg Radio. You heard both of us chuckling a little bit because I was pretty shocked about how brazenly he was offered magic mushrooms on the beach. But like you said, Carol, it kind of reminds us of what was happening with cannabis a little bit a few years ago, right?
You and Chris, just a couple of fun guys.
Oh, come on. She did it.
You did that joke all over it. Well, magic mushrooms moving from the margins to the mainstream. There is the whole pursuit section of Bloomberg Business Week this week is all about mushrooms used in leather, different supplements, and then there's the psychedelics.
And we just talked to the chief technology officer at Chipotle, who led around in Meaty, right? A company that's made of mushrooms.
Oh, yeah, right. Mushrooms are definitely having their moment. We highly recommend that you check out. The conversation with Chris was pretty wild. His personal experience. Didn't you even try something like after we...
Yeah, he had these mushroom supplements. These were like, you know, that you'd buy at a vitamin store, and they were meant to give you energy and focus. So I took a couple of those yesterday.
Help?
I don't know. I mean, I did have a pretty good day. I got a lot done.
I don't know, team. Did he seem more focused yesterday?
Thumbs
Paul
up
Brennan
from the team.
always says thumbs up. Thumbs up, rather. Maybe I'm taking some mushrooms. Okay, no, only kidding. Anyway, check out more of Pursuits in the magazine. It's also on our weekend show and podcast, our weekend show, 8 a.m. on radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Down Friday with the S&P declining for the first time in 4 days. It was a winning week with the S&P this week up by 2.55%. The Dow this week up 2%. NASDAQ this week, the outperformer, up by 3.3%. Today, however, stocks fell as disappointing results from social media firms and weak economic data added to recession fears. Snap Inc., parent of Snapchat, plunged 39% today. Meta Platforms, parent of Facebook, down 7.6%. Alphabet, parent of Google, was down 5.8%. By the way, both Meta and Alphabet report next week. S&P down 37 points today, down 0.9%. The Dow dropped 137, down 0.4. NASDAQ down 225, down 1.9%. 10-year yield 2.75%. Spot gold up 0.5%. 17.26 the ounce. West Texas Intermediate crude down 1.3%. 95.08 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So cakes, cupcakes, cookies, bars, pies, and pudding. Susie Cakes is celebrating its Sweet 16.
Yeah, and if you're from California, or perhaps you've been to Texas or California recently, you might have seen a Susie Cakes in the flesh. Well, Susan Sarich is the founder and CEO of Susie Cakes. She joins us on the phone from Los Angeles. Susan, how are you?
I'm great. Thank you for having me on today.
Well, it's good to have you with us. Can you take us...
Happy 16.
Yeah, happy 16. That's true. Take us into the origin story here, because you've got a pretty great beginning, taking the recipes from your grandmothers and building what's become an empire.
Thank you for that. Yes, I grew up in Chicago, and both of my grandmothers, Mildred and Madeline, lived across the alley from each other. So while I was growing up, we always had some great desserts around the house. And fast forward, I went to hospitality school for college and then worked in the hospitality industry about 15 years. While I was in food and beverage and hotels and restaurants, I noticed a lot of women leaving the business because it was difficult to have a family or have a life outside of work, working 24/7. So I drew up a business model predicated on women having careers in hospitality without having to sacrifice other areas of their life, combined with these amazing 3x5 handwritten recipe cards I had from my grandmothers.
You know, my mom still has those recipe cards from her mom.
I have them from my mom.
Yeah.
We share them around. We kind of mimeograph now and share them through the family.
They're valuable.
So
don't lose them.
So let's talk about your business, though. I think about 16 years in, you have made it through the financial crisis, the pandemic, and then today's supply chain stresses and more, and also an environment that continues to be disrupted in innovation, whether it's in the food space, how we work, who's working. We think about diversity and inclusion. So talk to us about kind of that progression. That's a long time to be running a business. How do you think about it today and how you run it?
It is. You know, one thing I've always been is very true to what our core mission is, which is connecting through celebration and not trying to be all things to all people and just being very good at what you do. And so what I have focused on since day one was creating the highest quality scratch-made products combined with the highest level of guest service to all of our guests, and being very straightforward and open about what we're doing. Our kitchens are open. We use high quality ingredients. We don't sacrifice on that. And I think as troubling and up and down as the economy has been, and times are, people really want to celebrate now more than ever, but you always want to celebrate, right? And so to be able to bring that joy to people and bring your mindset to a simpler time. A lot of people tell me our cakes remind them of their childhood, or, you know, when life was easier. And so I think that Susie Cakes has really thrived over the past 16 years, because as life gets more complicated and people are, you know, on their devices more and more, this premise of connecting through celebration with human beings face to face and sharing a cake and celebrating somebody has really resonated.
Well, Susan, one area of life that has become increasingly complicated in recent years has been the labor market, and it's something that we talk about with companies big and small. I mean, we're in the midst of earnings season right now, and there's not an earnings call that happens without commentary about attracting and retaining talent right now. How's it going for you at your locations throughout California and Texas? Are you having a hard time keeping employees? Are you having to raise wages? And are you seeing differences in different areas of the country?
Yes, it's been very challenging actually in both areas of the country. And, in order to meet the decreased labor market early in 2020, we had to quickly alter our business model to fewer days, fewer operating hours per day, and fewer product offerings. So we really had to lean heavily on technology and have a focus on driving more sales online. So as a result, we've increased our online sales from 6% to 31%, which is huge, but that allowed us to have less team members in the store taking orders and having an easier production model, creating less waste. So we actually ended up with a more profitable business model.
Really? Because I do think about like the higher price cost. I mean, are you feeling though a little squeeze sometimes right now just because of...
huge squeeze. Yeah, huge squeeze. Both our cost of goods and cost of labor are up well over 10%. And, like most retailers, we've had to pass some of that on to guests. But since we've built our reputation as, best in class and highest quality, we've been able to maintain our guest base.
One thing I wanted to ask you, from what I understand in reading in for this, is that you pitched your business for like 2 years. Is that fair?
That's fair. Yeah, it was. Yes, I would say the better part of 18 to 20 months. Yep.
Wow.
Was it just that? Because we talk about this a lot at Bloomberg, about the ability or inability of women and certainly minorities to attract investment dollars. What was it? Was it just because did you bootstrap or did you get money or like tell me about it?
No, very bootstrapped. Literally everyone who I spoke to and showed my business model to said Susie Cakes was a bad idea. And even the SBA said, Susie, baking is a hobby, not a business. And it was incredibly frustrating and difficult at times to, keep going, knowing that so many people were saying, and people I respected, were saying that it was a bad idea. And so really only options that we had were bootstrapping and, gathering money from friends and family who would, at least, have a little bit of faith in me to get the first store open.
What would you say to the world at large, having seen the business that you're building, and it sounds like you continue to grow? Because it does sound like investors, whether it's angel investors or an SBA, that they're missing a huge part of our population.
100%. So much of my time outside of work is spent on supporting the next generation of female entrepreneurs because they are still struggling with getting funding, and it needs to shift. And I don't know what will create that shift, but I am still seeing it 16 years later.
Okay, you guys have locations, Susan, in Texas and in California, but you can actually order online and you do ship nationally, so people who don't live in those areas can get Susie Cakes. What about expansion in terms of bricks and mortar? Because on our planning call this morning, we were thinking, wait a second, this would work in New York pretty well.
And just have about 20 seconds.
Yes. We are looking for brick and mortar expansion as well as the nationwide shipping. So we're looking to have a flagship location in major metropolitan areas and then build out the brand name from that and enhance our nationwide shipping.
Wait, you do ship?
They do ship
nationwide.
We do ship.
We just started shipping. It's a new initiative for us.
I'm checking out a carrot cake and a flourless chocolate cake. I am hungry. All right. Susan, good luck. Stay in touch. Let us know how the expansion plans are growing and just running the business. So great to catch up with you. Susan Sarich, she's the founder and chief executive officer of Susie Cakes, joining us on the phone from Dallas. I love me some flourless chocolate cake.
All right, next year for your birthday,
cake.
maybe.
Promise?
Yeah.
I'm going to hold you to it.
Okay.
Mark the date. It's July 22nd. All right. Hey, listen, check out our weekend show. Our thanks to our producer, Paul Bannon. Have a great weekend, everybody.